Volkswagen, plenty of those moves do. Perhaps that's what's showing up in the DAX story as well. And of course, AB InBev, the likes of Lufthansa, there's plenty of other micro stocks to be keeping an eye on. It looks like we're going to be drinking out of a fire hose yet again, Guy, in about a few seconds' time.
Yeah, and we've got the ECB to fold in. We haven't really talked much about the BOJ. There's so much going on this morning to fold in. So let's see how the markets are digesting it all and figure out what the numbers are going to look like. As we anticipate, we are seeing a little bit of a negative start for the FTSE 100. Interested to see what Shell does this morning first thing. We'll see how that is folded in to the wider narrative here for the London market, which has had a decent run recently. The IBEX is down by 0.2% as well. There's quite a few ex-dividends out there, so just bear that in mind this morning. And there's a fair few big names that are going XD. Stock 600, as anticipated, basically flat. We're down less than 0.1% at this point. The CAC's got a lot to think about. Clearly, we've got politics to fold into the market as well around Europe. We'll see how the AEX, it's not on this board, see how the AEX opens in a few minutes' time. The CAC is down by 0.2%, feels pretty much in line with what we're seeing elsewhere. We'll wait for the DAX, we'll wait for the SMI to give us the final read on what we're seeing across Europe. So in the meantime, Critty, what are we seeing in sectors? What are we seeing in stocks?
I'm not able to piece out a narrative just yet from some of these early movers. I mean, your biggest index contributor to the upside is ASML. No surprise there. There's a big theme kind of radiating through these markets. We're going to check on some of the US tech names in just a few moments as well. But for the moment, ASML is your biggest index contributor, but you are seeing a big move in the likes of AB InBev, for example. Shares rising 4%. Their third quarter results, a $6 billion buyback. That seems to be a theme that's radiating through. You are also seeing perhaps a little bit of the steam come out of this market, including banks, which aren't moving at all. But maybe that's because some of the banks are rallying so much in the lead up to this moment. Guy, on the surface, this feels like a rotation.
Yeah, a little bit of rotation. There's some tech buying. Airbus is actually seeing a really nice response this morning in terms of its numbers, which it delivered yesterday late. Focus on kind of maybe the US investor there. Anheuser-Busch, as you say, is up very nicely, but there are some tech names that are up. SocGen's actually up by 2.4%. Standard Chartered is up by nearly 3% this morning. Yeah. So you are seeing some bank positivity coming through. Schneider's a little soft. I need to just actually go back and check my XDs and see what they are in terms of the list that I'm watching. I've got a list somewhere.
I don't think Schneider's on it.
No, it's not. Inditex is, though, and that's a big name, and Santander is as well, which may account for some of the movement we're seeing in terms of the Spanish market. Total, though, is down by 2.75 in the oil space. So we are seeing some weakness when it comes to what we are getting in terms of the oil majors this morning.
Yeah, and I should keep an eye on that. Rio Tinto is also trading lower by quite a significant margin, down about 1.5%. It's seeing a little bit of heavy volume here, which is interesting. The miners are perhaps the first place you would look in the FTSE in terms of pricing in some of the trade conversation that we're seeing. And some of the steam is coming out of that market. We're going to get a little bit more analysis here. Nancy Curtin, CIO over at Alti Tiedemann Global, joins us around the table. Hi, welcome.
Good morning.
There's so much to digest. I don't even know where to start, but I think I'm going to go for the easy one, which is trade.
Yep.
We didn't get much out of it, but we didn't get something bad out of it. How do we think about trade in terms of this market?
You mean the big amazing meeting yesterday, which was totally on script with lots of pomp and circumstance? Look, we got exactly what had been forecasted, which is reduction in fentanyl, a couple of soybeans that China will buy for the United States, and a delay in the export restrictions on critical minerals. We didn't get any news on the Blackwell chips. I mean, Trump sort of mentioned it in passing.
Yeah. So it was
as expected.
While you mentioned that, NVIDIA not actually budging. I'm looking at the pre-market right now. It's up by 0.4%.
Well, it had risen a bit yesterday on that speculation, right? So I think it was as expected. Look, what's important is the two countries, the world's first and second largest economies are not in the middle of a trade war, and I think they agreed to meet again in April. So we have a kind of framework, a sort of mini trade détente. In that sense, it was fine. It was as forecasted.
So when we're trying to price this in, it feels like the narrative has substantially shifted from where we were 6 months ago, where we were talking about margin compression, we were talking about supply chain costs, we were talking about export restrictions. Is the market looking through some of these things that are still kind of in the air?
I think so. Look, the effective tariff rate at the moment is about 17% in the United States. We have seen some good price increases. We heard Chair Powell yesterday. He talked about the fact that goods prices have gone up. He sees it as a one-time, or at least that's the expectation, and services disinflation kicking in, particularly owner equivalent rent, which we've been waiting for years. So, look, I think the inflation picture is okay. The reason we're getting the rate cuts is because what's going on in the labor market in the States. So, generally, I think the trade picture, people are now moving that to the back of the queue, so to speak, in terms of areas of concern and focus, and really looking ahead to what's going on in Gen AI.
Are we getting the rate cuts? Are you sure about that?
Well, I thought it was super interesting yesterday because he said, look, the labor market's moderating, but we think it's okay. And I'm thinking, okay, we don't have any government statistics, but has he not noticed the 150,000 workers that I've been counting over the last couple of weeks of layoffs, including Amazon?
He said he was watching them.
Okay, well, if I saw that, I'd be like, we're probably going to have a December rate cut. So that's my view. We will get a December rate cut. He was obviously quite cool on that yesterday. That's why the market sold off. Look, what's happening here in terms of the labor market, it was a bit of Doge in the beginning, a bit of the energy sector, a bit of trade, manufacturing that caused the layoffs. Now, I think it's Gen AI, and I think we're beginning to see that. Take a look at Amazon, 34K, so to speak, in terms of layoffs. And I thought super interesting, Amazon hinted at the fact that in 5 years from today, they'll be using, AI-inspired, powered humanoids, robots to do all their fulfillment. That means picking stuff off shelves, and they think they'll get a 30%
And you think is that enough to get this market going higher? It was interesting. We were talking to Mark Cudmore, our market setter, a little bit earlier. He's saying, I can't see any reason to be bearish. I can't see any reason to be bullish at this point. What's the reason to put more money to work in this market, other than the mechanical ETF kind of flow into haven't we priced all of this?
I mean, to a certain extent, you're right. There's been a lot of good news priced in. Having said that, we're still in the midst of the third quarter earnings season. 87% of companies have beat expectation. The tech sector, with some varying results, beat yesterday. And that's important. If we end up again with 12 to 13% earnings growth in this quarter, with expectations of a rise in the fourth quarter, that helps sustain markets. Also, look, a lot of people have missed this rally. Many institutional investors are still underway. Sure. Strategists scrambling to get their numbers higher, going to look like a turkey here. I spoke to
Sergio Mossi yesterday, CEO of UBS. He's like, people are getting defensive. Our clients are beginning to position for a more defensive outlook that they need to be working with at the moment. Is now the time for capital build, or is now the time for capital kind of preservation? You've had an amazing run in these markets. Is it now not the moment to say, you know what, I've had an amazing run, time to start thinking about maybe preserving some of the gains that I've generated?
Well, we don't like to trade on short-term fundamentals.
That's not a long-term fundamental.
And remember, for a U.S. taxable, becoming more defensive now means paying capital gains, in the last 2 months of the year. Makes no sense. I think if there's a correction, it's going to happen in January as people rebalance their portfolios back to their neutral target, as opposed to now. Why incur capital gains now in the last 2 months of the year? I remember there's a lot of cash sitting on the sidelines. So I'm not pounding the table. Markets have risen fast and furious. Yep. I think a consolidation, a pullback, a correction would be super healthy here. Look, we're up close to 40% since the April lows. We've added $16 trillion in market cap. These are big, fancy numbers. So a consolidation would be good. But I think the fundamentals remain pretty attractive still.
Well, interesting that you mentioned the fundamental. I'm just looking at some of the pre-market moves. Again, most wonderful time of the year when the time difference is only 4 hours. Your biggest pre-market mover in the U.S. at the moment is Chipotle. It's down 17%. And Nancy, I want to ask you about Chipotle specifically, but as I was kind of looking at what's going on there, it looks like they're talking about feeling the pinch, feeling the pullback. People just aren't buying kind of fast food, casual dining, which really speaks to this pinch of disposable income. If you are talking about the unemployment that you had laid out, the pinch here, can a rate cut look through that when it comes to macro investments?
So, great question. Look, the U.S. is experiencing a kind of two-speed or K-shaped economy. So the lower-end consumers are the ones that are getting laid off, are the ones that are feeling the pinch, are the ones that will benefit from a rate cut because they may have credit card debt, they may have student loans, okay? Yeah. So that's the lower end of the market. And I think Chair Powell alluded to that yesterday. The mid to upper-end consumer doing just fine. The wealth effect in America is quite extraordinary, and that accounts for the lion's share of consumption. Consumption growth has remained strong. Right?
But then why are we seeing this rally broaden out? What you're describing shouldn't show breadth, and yet here we are, we're looking at breadth.
So what we're looking at is weakness in things like Chipotle and some of the lower-end retailers and big box retailers and some of the fast food companies that would be associated with lower-end consumer. What we're seeing that's broadening out is the Gen AI trade is broadening to other parts of the market. Let's see what's done well this year. Technology and communication services, industrials, and utilities, that's all about Gen AI, right? Financials, deregulation. So we do think the Gen AI trade is spreading across the market. And by the way, therein is the opportunity as Gen AI takes hold in lots of companies, consumer applications, enterprise applications. That's the broadening out you're seeing. But the lower-end consumer is experiencing a bit of a pinch in the States. K-shaped economy.
Does the K get bigger? Is that?
Maybe. You know, I think we're beginning to see the elements of what Gen AI might mean for the lower-end consumer. And what is interesting about a rate cut that you asked about, Guy, is a rate cut does help the construction, the housing market. Construction is a big hirer, a big job creation for the lower-end consumer. So that is where the rate cut could help.
Isn't the danger with Gen AI, and you're seeing it in the white-collar workers, that the danger's not down there, the danger's up here, isn't it?
You mean in terms of mid to upper end consumers? You mean you and I? Yeah.
Yeah. Hopefully not.
Yeah, your avatar. I'll be talking to next week. But no, look, I think what's happening at the moment is people like you and I have Gen AI as an assistant. Jensen Huang talks about that. We're more productive as a result. If every company's more productive, then productivity will rise. So it's not replacing upper end.
I'm saying job losses.
Yet. Job losses are largely in the lower end. As I said, Amazon. You know, they're talking about robots for fulfillment. Sure. I don't think that's your job.
But other companies are talking about white-collar workers.
Yeah, I think also graduates could be weaker than expected. Bringing in new graduates. There's a lot of applications coming for investment banking, doing the job of a young analyst investment banking. So this is something we have to watch, right? This is definitely coming in terms of Gen AI's impact on the labor force.
But Nancy, it feels like that premium, that AI premium that's showing up in some of these stocks isn't actually distributed equally. We were looking at, especially here in Europe, we'd had deals from NVIDIA talking about Deutsche Telekom with Nokia, among a series of others, and the premium is smaller here in Europe. That AI bid is smaller when it comes to partnerships here in Europe. You see the same thing in small caps in the U.S., even with these AI partnerships. If we are talking about a broadening out that's tied to the distribution of AI, how do you quantify that?
Well, I think it's a large cap. This is a winner-take-all environment. We've been very cautious on small and mid-cap. The companies are more exposed to tariffs and trade. They tend to be more intermediate. They have less pricing power. They have more leverage. You have more of the regional banks in that sector. So, our view is this is a large cap. The United States is definitely spending the most on Gen AI, probably likely to be the leader in Gen AI, winners and losers still to be determined. And I think, the market is now becoming more discerning. Look at the tech numbers last night. The difference between Alphabet and Meta. Alphabet showed a substantial increase in active users on its Gemini, and that contributed to the stock rising. Okay, it's spending a lot of money. It's getting some results.
But it's funding it out of cash flow. Like it's funding it out of its existing business. Meta's not, and that's where the difference.
Correct. And also Meta's advertising kind of softer, harder to imagine. And of course, if Meta overbuilds, what do you do with it? You know what I mean? Whereas Alphabet, Amazon can sell on that compute power. So I think that's also the differentiation.
At what margin? We will wait and find out. Nancy, great to see you. Always a pleasure. Genuinely. Nancy Curtin, Chief Investment Officer at Altitude One Global. Let's take a look at the markets, figure out what is happening right now. NVIDIA is just beginning to soften up a little bit pre-market. Here in Europe, tech does, though, stand out. As you can see, ASML is the standout gainer. Elsewhere, you are seeing some weakness. Let's figure out what's happening in the banking sector. Some interesting moves there this morning, and Chloe Melly has been tracking them all.
Good morning, guys. So, yes, some positive movements for Société Générale today, which is up 1.5% after reporting better than expected profits. So that was due to, really strong cost control, but then also really strong performance in fixed income trading. So this is also a division that benefited Deutsche Bank quite a lot, and we saw that yesterday, and the stock also rose yesterday. So it's quite a good set of results with good performance across all of its divisions for SocGen this morning, and we see the stock rising on the back of that. We also have some positive movements for another bank, which is this time Dutch bank ING, which said that it was going to have a 1.1 billion euro buyback, and it also raised its revenue outlook for the year. So that is driving that stock quite a lot this morning. This is really ING delivering on its plan to boost growth through fee income and not rely as much on lending income, which is, of course, really dependent and really vulnerable to those interest rate changes. Moving on to a less positive story, and WPP is down quite a lot this morning. It slashed its revenue guidance and said that it was going to revamp its whole structure. So the new CEO, Cindy Rose, that's her first set of results, and she's really having to make some drastic changes to reverse what has been a really, really negative performance for WPP recently. It's really fallen behind its closest rival Publicis and also lost really big clients. So she has to make a lot of changes, and so far the revenue guidance being slashed is being quite negatively received by the market. Alien, on the other hand, it's a consumer healthcare company. It has reported quite reassuring results this morning, which is why the stock is up. It had to slash its revenue guidance last quarter at the earnings season over the summer, but it seems that it's doing better now, and despite some weakness in North America, it is able to deliver on that growth, and therefore it is being rewarded by the market this morning. And finally, Arcadis, which is a consulting company, reported quite weak results, and it was also downgraded at KBC, and that is really driving the stock down. We've got a massive drop this morning for that company, and it is down 18.7%.
All right, Chloe Melly from our equities team, we thank you so much walking us through some of those early movers in the European session. Coming up, we're going to dive into a little bit more of the details, specifically when it comes to European banking. That story next. This is Bloomberg.
In case you missed it on Bloomberg Tech Europe.
Well, I would argue that our odds are pretty good at winning a big market share. But of course, some incumbents will manage to reinvent themselves, right? I think Jamie is on to something really exciting. He's trying to do it now. Solomon was trying with Goldman Sachs, but then kind of Marcus, was thrown out when the fintech valuations dropped down. A lot of banks stopped their aspirations in fintech, and now they're waking up to that fintech never died.
Don't miss Bloomberg Tech Europe every month.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, Mondays on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something? Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
I'm David Weston. Join me for the next generation of Wall Street Week. This week, special contributor Larry Summers on the Fed decision and the Trump-Xi meeting. what President Milei's victory in Argentina means for investors and for the United States, and the godfather of AI, Geoffrey Hinton, on why what he helped create could mean the end of us all.
We should be a lot more worried than we are. How are we going to coexist with these things?
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Haslinda Amin in Bangkok. This is Bloomberg.
Let's call it 19 minutes into the session. This is the picture. Index level, nothing to see here. This looks quite dull. Below the surface, there is lots going on this morning in terms of the single stock moves that you're seeing. There's plenty going on in the banking sector. We'll get to that in just a moment. Let's talk about one of the standouts to the upside, though. Airbus out with its numbers last night. Big focus on US shareholders at the moment, so kind of the focus there. The emphasis is what is happening in terms of kind of how they sort the supply chain out. There's a big focus at the moment of defense. Obviously, we've got the space unit that is kind of being created currently, built into sort of Toulouse at the moment. That's a big story going forward. But Guillaume Faury, the CEO, did continue to sound the alarm about what is happening in terms of the key kit that he needs to get the aircraft out of the door.
The main bottleneck is the engine availability from both CFM and Pratt. We were with a very difficult situation at mid-year. Things are improving. We think we're going to reach our numbers, as I said before, for 2025, but we will have persisting tensions on availability of engine in 26 and maybe in 27 as well.
Guillaume Faury, the CEO of Airbus, speaking to Bloomberg last night, he doesn't like building what he calls gliders, i.e. you can build the aeroplanes, but if you don't have engines to put on them, or aircraft to put onto the engines, then actually no good. Our global aviation editor, Benedict Campbell, is in London, which is fantastic as well. Good morning.
Hello.
He flew here.
He flew, yeah.
I did, on a plane that has engines.
Excellent. It helps, doesn't it?
It does.
It makes life a lot easier, or at least faster. So how big a problem is this? There's a lot going on here. You got the supply chain issue, which continues. You got tariffs. You've got all kinds of issues going on. Is this the area to focus on, the supply chain still?
It is, and it has been for a while, and if you listen to Faury, it will continue to be. He said it's going to continue into next year and possibly 27. That's something that people don't like to hear. On the gliders issue that you mentioned, they are down to about 30 at this point. They had 60, so it's moving in the right direction, but the plan is really to get rid of all these gliders by the end of the year. They've built up a lot of inventory for the last couple of months to really get the kit out of the door. That costs them on the cash side. But the good news seems to be they have something of a handle on the problem. They are reducing these gliders, but the engines really will continue to be sort of a choke point.
Talk to us about Lufthansa earnings as well. What do we glean out of those numbers?
Very strong numbers, really, and the stock reacting quite positively. But if you look under the hood, there are some issues there. If you look at the North Atlantic market, that continues to be quite weak. That's something that we've heard from a number of European airlines. Virgin were the first to sound that alarm, BA to some degree, and now Lufthansa is saying that the revenue per seat into the US market is actually quite weak. Also, interestingly, tariffs are actually hitting the company in their maintenance business. Steel is expensive, other materials, that's hurting them. They won't reach the targets they had in mind in that business, but overall people seem quite happy that they are maintaining their outlook for this year and the stock is up.
I haven't seen you for a couple of days. Been focusing on the banks, which is interesting, but let's talk about what we've seen over the last few days in the aerospace sector. Boeing numbers. This charge relating to the 777X is enormous. They're still challenged by what is happening in terms of this strike, in terms of the defense business as well. We now know they're likely to push forward with a new single aisle. There's a lot going on at Boeing. How do you think investors should be reading kind of these various strands that Boeing is trying to pull together? What's the takeaway?
I think the takeaway is that Kelly Ortberg, the relatively new CEO, is trying to get all the bad news out of the way, and that's why you see this really large charge. We knew that there would be a charge. We didn't think it would be almost $5 billion on a program that they really should have a handle on at this point. And he was asked this by analysts on the call yesterday, and they said, why this charge, why so big? And he said, I don't want to see this cascading for months and quarters and quarters. I want to get the bad news out of the way, and I think we're done. The good news on that charge, on that aircraft, is no problems with the plane, no problem with the airframe or the engines. It's all in the certification process. That's where the bottleneck lies. It's the FAA that are dragging their feet to some degree or being very careful.
Can you certify it during a shutdown? Is that part of the problem?
That's still going on, yes. So they still have the teams on the ground. That's still happening. Probably doesn't help and probably slows down things to some degree, but it's not the massive disruption that you'd expect.
And I believe that there's the air traffic controllers in the States as well that are already talking about not getting paid, talking about striking. A lot of really fun stuff happening in the aviation space in the States. Bloomberg's editorial lead for global aviation, Benedict Campbell, joining us around the table. But you said it, a guy said it earlier, banks are really the focus this morning when it comes to what has been moving this market, not just today, but throughout the week. Standard Chartered, for example, has lifted its income and returns outlook as a reported third quarter profit that beats analyst estimates. On top of that, Credit Agricole, SocGen also producing positive numbers. We spoke to the CFO of Credit Agricole earlier today. She said it was a strong overall performance.
Net income grew to $6 billion over the first 9 months of the year, which is in fact the target that we had set for the full year 2025 in our medium-term plan. Strong home loan production in France, strong corporate loan production in France and in Italy, strong inflows in insurance and in asset management, a very strong performance in our CIB with a record 9 months. And so this growth in revenues contributed, along with our operational efficiency.
The CFO of Credit Agricole, they're speaking to us earlier in the program. We should mention, she said those were strong numbers. The market disagrees. Those shares are down about 2%. Let's break it down further. Bloomberg's managing editor for EMEA Finance, Tom Metcalf, is here with more. Tom, let's put Credit Agricole for the side for a second. Every other bank seems to be doing very well, not just today, but this week. What is your takeaway from the sector?
Yeah, it's been a pretty positive week set of earnings for most banks, and Standard Chartered is a good example. I mean, I think it's a different story for every bank. Standard Chartered today, basically driven by very strong numbers in its wealth unit. So wealthy client, they say they're coming in, they're investing in the market. That's helping boost their bottom line. And yeah, the investors really responded well to that. I think shares are up 3-4% on that. A bit like HSBC, so similar story there in terms of you've got wealthy clients in Asia, and they're keen to be in this market at the moment.
3.94% to the upside. Agricole's down. SocGen looks a little bit more positive. Talk to me about the French banks.
Yeah, SocGen, certainly it's just a good story there under the CEO Krupa. I think the shares have doubled under him over the last year, and it's basically just good momentum. He's streamlining that bank. He's keeping costs under control, which is always critical. And investors just really welcoming that. Interesting on the Credit Agricole side, slightly, I think it was just viewed as slightly soft, and, there was a big boost to the results from Banco BPM. But I think that's seen as, as low quality, and also it's not really kind of core for their French business.
Are we done for the banks this week now? Is that it?
I'm hoping so. I need to sleep.
So none tomorrow?
Not many. I think there's always a bank earnings, but no, the big ones for this week have come through, and it's been fascinating to see the ones.
Amazing. Our managing editor for EMEA Finance, Tom Metcalf. Thank you very much indeed. Not just for today, all week. Great coverage. Okay, let's talk about what we've got going on pre-market. Tech is a big theme this morning, and these are some. If you could read these are some of the numbers. There's kind of a standout story as well, which I think says Meta. Does that say Meta? I can't read it.
It does. Here, how about I do this one? Alphabet is higher by about 7%. Meta is down by about 7%. Those are the two earnings numbers that came out yesterday. Pretty violent reactions in those stocks. Chipotle also not having a good day, down about 17%. They're worried about the end consumer. We're going to dive into all the details next. Stick with us. This is Bloomberg.
What's the best investment advice you've ever received?
It's hard to pinpoint one thing. Being disciplined and having a very long time horizon is really important. I see a lot of people that are unwilling to make investments and take risks when the return potential is the highest, and in fact, in some instances, go the other way. So I'd say have a plan and be disciplined. It took me a little while to learn that just because something was down quite a bit doesn't make it attractive, and just because something's up quite a lot doesn't mean that it's expensive or that you've missed it. We had a former portfolio manager that used to say, don't cut your flowers and water your weeds, and we've certainly been through a period of time where it's paid off to let your winners run, and I'd say through my career as a large cap growth portfolio manager, that was a pretty important element of my process.
In case you missed it, on Bloomberg Brief. This is a big difference from April. Remember when there was no place to hide? And now, even though the 10-year is below 4%, if you start to see the labor market showing signs of firing, whether government or the private sector, I think then the 10-year has a lot of room to decline, because then the Fed's cutting into accommodative territory, not just getting to neutral. Don't miss Bloomberg Brief, live every weekday.
Power, money, culture. Haslinda Aman tells the story of Asia's rise through the people who are helping to shape it. On this episode, building a global hospitality empire. How Chef Nobu reinvented the business of fine dining.
The restaurant concept and the hotel concept, for me, the same. I like to make happy to guests. My philosophy is always quality food, quality service, most important, heart.
Encore presentation this weekend, only on Bloomberg.
Didn't really think I had a problem.
I would isolate, self-medicate. Like 48.5 million Americans, they didn't choose addiction. Go to shatterproof.org/finds-treatment. Watch the film No More Secrets and find out how you can get help. That's shatterproof.org/finds-treatment.
Welcome back to the opening trade. About 30 minutes into today's session, it feels like a lackluster market on the index level. The FTSE 100, I should say, is down about 0.4%. That's the most exciting market move you're getting. The DAX higher by 0.3%. Don't ask me to make a narrative out of this, Guy. Over to you.
Okay, miners are down a little bit. I think that's why London market is underperforming right now. To Chris' point, though, what you've got this morning, certainly for European market perspective, is a series of single stocks that have been reporting numbers. There's some big names out there reporting numbers. And largely at an index level, we're kind of offsetting. So in terms of up 207, down 364, so the skew's a little negative, but volume up by, let's call it 20% this morning as we work our way through these earnings. It's only Thursday, you've still got Friday to go. In terms of the upside, ING, fee income, big boost to fee income. That's being rewarded by a 4% move to the upside. Airbus out with numbers last night. We just heard from Guillaume Faury. That stock is up by 3.3% this morning. Mercedes is also rallying a little bit. Have we hit the bottom now in terms of some of these auto stocks? Okay, let's work our way through some of the laggards and see where the losers are coming through in Europe this morning. Schneider's down pretty hard, down by 2.12%. Diageo in the spirit space is down as well, hard. What is interesting this morning, there's a couple of things. Take a look at Kongsberg. We were just talking about this as we came to set. Down pretty hard this morning. So you're seeing some weakness coming through in some of the engineering companies. You're also seeing some of the weakness coming through into some of the energy companies as well, and the mining companies. Total is down by 1.2%, 1.3%. Basically what you're getting is a lot of offsetting this morning. Got some up, got some down. Pretty balanced, index level, therefore fairly flat. Critty, what else do we need to know?
Lots going on this morning. Drinking out of a fire hose. Let's get to some of the other news from around the world. Federal Reserve Chair Jay Powell delivered a blunt warning that investors need to rein in expectations for a December interest rate cut. Now, the comments underscored a growing tug of war among policymakers who are opposed in their outlooks for jobs and inflation. And sticking with central banks, let's talk about the Bank of Japan. The policy board left its benchmark interest rate unchanged. It's central bank's first decision since monetary easing advocate Tsunai Takaishi became prime minister, illustrating the delicate balancing act that the BOJ is attempting as it tries to gauge the timing for its next move without being swayed by weakness in both the currency or its political leaders. And sticking with what's going on in Asia, Donald Trump and Xi Jinping agreed to extend a tariff truce, roll back export controls, and reduce other trade barriers in a landmark summit going on today, potentially stabilizing relations between the world's biggest economies after months of turmoil, Guy.
Okay, let's talk about what is going on with... There's kind of a bunch of things we need to talk to Freya Beamish about. She's the chief economist at Global Data, TS Lombard. Global Data, TS Lombard?
Data, TS Lombard,
okay,
that's the one.
just wanted to make sure that I had that right. That wasn't
Absolutely.
sort of two different bits. Anyway, look, nice to see you. We've got a whole bunch of things going on this morning. The first thing is Trump-Xi. So let's talk about that first. We need to talk about trade. We need to talk about what is happening with the Fed and the ECB and all the other good stuff as well. But let's start off with Trump and Xi. Trump said it was amazing. Was it?
I mean, I think the Chinese authorities have done amazingly well at playing their cards. I think they had a very clear threat that was a good threat on rare earths, and I think they had a very clear sort of exit route for Trump to take on the fentanyl side, and I think that's been quite clear for a few months now that they have been working very hard to show progress on the fentanyl side to give them that sort of escape route there, and I think that's paid off.
In terms of where it leaves us, though, and what the economic effect of kind of where we are now is, what is it?
Yeah, it's good in the sense that it pulls us back a little bit from the proximity of the overall tariff rates to what we would think of as sort of critical thresholds on where the dynamics of inflation really start to change, and you get more concerns over sticky inflation and higher and volatile inflation. So anything that pulls us away from that brink is good. I think potentially going into the new year, it's a midterms year. Maybe they want to deliver some more wins, so you could even see sort of more positive surprises on this front of trying to bring down that tariff rate to some degree, one way or another. And I think that all in isolation is good. But when you take it, well, it depends on where your delta is, right? So compared to the pre-Trump scenario before any of these policies really started to kick in, we are in a deteriorated supply side environment with, I would see the demand side as I think stronger than market consensus. And so that's a 2026 call for inflation to surprise to the upside.
So much of the pillars of Donald Trump's trade deals with countries around the world, it feels like has transformed from tariff rates to getting investment purchases and investments into the United States and really kind of building on the fiscal impulse that they already have. How much of that is actually, one, going to show up in the U.S. economy, and two, actually going to help grow?
Yeah, so I think there was always like multiple different roles that tariffs were going to play in the U.S. toolbox. Initially, it was about negotiation, then it was about fiscal policy, and now it's about sort of trying to provide those wins, as I said, going into a mid-year, a midterms year. So to the extent that in Europe and in Japan, in various different developed markets, in China as well, to some degree. Policymakers are able to sort of make those offers and sweeten the deal. I think probably Trump is sort of willing to take those given the political landscape. Yeah. The extent to which that will really come through and maybe was going to happen anyway is more of a question.
Do you have a percentage? I've heard this from various analysts when it comes to the actual tariff pass-through rate. I felt like the fear when it comes to the hit on the consumer that would, right now we're kind of seeing it shake around in corporate margins basically, but that ultimately would get passed down. And that figure went from 75 to 80% to 60%. At least that's what I've heard from the consensus. Are those fair figures?
Yeah, I think that broadly speaking, it's sort of like 2/3 margin compression, 1/3 CPI. I see that flipping, reversing next year. You need a bit of a sort of a reversal. You need a little bit of a sort of reacceleration in the demand side of the economy. But I think margins are very high compared with 2019 levels. So corporations were able to sort of absorb that shock in the first instance while there's such high uncertainty. But if the economy sort of starts to stabilize, particularly if some of the fiscal impulse starts to come through, then it's possible for them to sort of pass that on, and that reverses and goes into CPI inflation.
Okay, let's talk about the Fed. This is what Powell had to say last night.
In the committee's discussions at this meeting, there were strongly differing views about how to proceed in December. A further reduction in the policy rate at the December meeting is not a foregone conclusion. Far from it.
Foregone conclusion? Should it be a foregone conclusion?
No, and I think markets just got a little bit ahead of themselves with that pricing going into the meeting. We don't have all the data. Powell likened that to sort of driving through fog and therefore needing to slow down. He didn't have to take the metaphor in that direction, though. He could have talked about the sort of the second derivative. He could have said slow down in terms of the trajectory rather than slow down in terms of cuts. He chose to say slow down in terms of cuts. So that's a signal in itself. And I think sort of more broadly, he's signaling that there is certainly a lot of divergence on the committee, but I think in his mind there's still sort of maybe we're starting to move back to, I shouldn't put words in his mouth, but we're starting to move back to the sort of the labor supply is maybe sort of stabilizing, labor demand is maybe stabilizing, and we're going more to thinking about actually, is this pass-through rate going to continue? To what extent is this something more than a level shift in prices? Their base case is that it is just a level shift in prices, but he talked about, maybe just waiting a cycle to think about, if the labor supply, if labor is actually stabilizing.
What is the lag time right now for the Federal Reserve? Traditionally, when we talk about monetary policy, it's 18 months is the standard. Yeah. We've seen it show up in the economy faster, I want to say, post-COVID. What is the lag time between a rate cut meant to address tariff pressures, labor market, housing crisis, whatever? What kind of lag time are we looking at?
I think that the U.S. economy at this stage is actually able to sustain higher interest rates than perhaps people think, right? So the lag time is I don't see the policy as tight as the Fed themselves sees it, and I think we're going to see that in the economy being a bit stronger than people sort of expect. There's this kind of dichotomy between, the spending data is a bit stronger and the labor market data is a bit weaker, but Powell was also sort of referencing how a lot of this is because of anecdotally corporations talking about what they can do with AI rather than hiring, and that means that this is a slightly different environment. We can't take the same level of signal from the labor market that we would normally do under these circumstances. Yeah, and I think that sort of that we're not as tight as people think maybe.
Donald Trump likes to talk about a housing crisis right around the corner. He's which I think is fascinating, given that we're seeing a steepening of the curve based on government shutdown. There's lots of fascinating things there. But he says housing is about to collapse. Like, we're minutes away from it collapsing. Are we?
I think we're definitely in a different secular environment on housing with immigration. I think that's one thing that Myron actually has right of the many list of things that Myron has said. I think immigration is in the research seen as a genuine sort of demand factor where there's constrained supply, and there's more likely to be constrained supply on the downside than there is even on the upside, because the houses exist, right? You're not going to go China on this and blow up the houses. So it's I think potentially we're in a different secular environment also just kind of demographically there. I think we're not in an environment where there's a lot of debt out there in the household sector that really can sort of cause a housing problem to sort of multiply and cause a wider issue there.
Okay, let's move on to what we're going to see for the rest of the day. I understand that the weather forecast for Florence today is thunder and lightning. Are we going to see that reflected maybe in what we get from Christine Lagarde and the ECB? Let's find out. We have sent Lizzie Burden to Florence. Remember, every once in a while, the ECB goes on the road. Are we going to see thunder and lightning today, Lizzie?
Absolutely not. I don't think so. Morning all, morning Guy. It seems very much in the minds of markets and economists that all we're going to get today from the ECB is a hold, the third straight hold. And indeed, in our survey, economists see holds all the way for the next 2 years because the ECB is waiting for clarity when it comes to trade and French politics. They're hoping that they get a Goldilocks scenario that balances the trade weakness with the upside risk to inflation from the German fiscal stimulus. So really, the question that we're hoping gets answered at some stage is the direction of the next move. And the Governing Council really, really divided on this. If you listen to the French central bank governor, for example, he wants to keep a 9th cut on the table. But if you listen to the Austrian, Martin Kocher, he's talking about maybe the next move being a hike. And indeed, he told me just how divided he found the council when he joined it. I spoke to the Cypriot central bank governor talking about how the risks to inflation are balanced, but they need to keep their powder dry. So it may be that more than this meeting and the commentary around it, the best path, the best clue on the path ahead comes from the updated forecast when they come in December. And in fact, that could be what gives the cover to any future move.
Well, Lizzie, of course, we are waiting for that forecast. But in the meantime, a deluge of European data. I mean, the French economy seems to be doing a little bit better than we thought, according to data from this morning.
Yeah, giving a Gallic shrug to that political chaos that we have been seeing in recent weeks. The government, of course, collapsing in September, so an upside surprise of 0.5% growth for French GDP in the quarter. But the main event really has to be the Eurozone growth number that we're expecting at 10 a.m. London time. 0.1% growth only is what is expected. But the good news is that tomorrow we get the inflation number, and that's expected to come in nearly at the ECB's 2% target. So this is precisely why Lagarde is talking about the euro area economy being in a good place. She actually arrived early here in Florence. She was perusing one of the markets, shopping for panettone for her husband. She broke the quiet period and said that food inflation has further to fall. But really, when it comes to this press conference later, not expecting fireworks, thunderstorms, lightning, or any of the above.
You stay away from that as well, Lizzie Burden. Thank you very much indeed. Lizzie Burden in Florence. I'm sure she'll hit the markets as well a little bit later on. Okay, back with Freya Beamish. Don't know why I got that one wrong.
Too many R's.
Yeah, I've said it plenty of times. There must be a kind of thing at the back of everybody's head that if things do go get a little softer for the ECB, there is the room to cut. Like, is it just one more potentially here? Is that where the balance of kind of risk lies at the moment?
Yeah, I think they're not trying to be too cute with finding neutral. You know, maybe earlier in the year there was a question of that, and the euro was giving them a bit of cover, and now we're a little bit back on the side of, there's just this US exceptionalism story, and there's the dollar was just a flash in the pan in April and May, and so maybe they feel they've got a bit less room there, and they don't want to try and be too cute about it. But while the kind of question of whether there's one more cut in the pipeline still lingers, it makes it a little bit hard to get onto our sort of, I guess, off consensus call for next year, which is we think they're moving towards a tightening bias for next year. So we see
late next year, early next year.
Late next year, we see a move towards a tightening bias there. You know, we see a benign reflation there, and the ECB sees it slightly different from us. You know, they'd be worried about German fiscal policy. We think it's great for the equity market, and it's good for the European economy in general. It's a little bit hard to play that until the question of whether the last cut is in. But as soon as we kind of have some kind of sentiment there, it'll be a little bit easier to less costly to play that.
Wow, a tightening bias to the end of next year. Yeah. That's not one that I had on my bingo card. Freya Beamish, Chief Economist over at Global Data at TS Lombard. We thank you so much. Coming up, we go to some of the geopolitics. The progressive D66 party looks set to play a key role in forming a new government in the Netherlands. We are live in Amsterdam next. Stick with us. This is Bloomberg.
For Trung Jobin, you're never too young to learn AI. That's why he's urging the government for school kids as young as 6 to be taught how to use it.
Within this system, from first grade, they all start with the AI education. They play 4 years, just playing. And then from 5th grade, they start to develop AI by themselves. And STEMs and robotics, I see very clearly how Vietnam should be in future. Vietnam just about 100 million people, young people, good education, and latest technology. That's the only way to go. Education not contribute much profit for equity, but from the country point of view, that's most useful contribution, what equity should do. And today we're thinking about every kids, not in cities like Hanoi or Ho Chi Minh City, but kids in the countryside should got the good education. That's what we're going to do now.
So you're leapfrogging?
Yes, exactly.
Bloomberg brings you breaking news 24 hours a day. Powered by more than 3,000 journalists and analysts in more than 100 bureaus across the globe. Bloomberg Television. Context changes everything.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Welcome back to the opening trade. About 48 minutes into today's session, take a look at the index level. The outperformer is the DAX, but that is due to some key earnings there. The FTSE 100, I think, is more interesting. That's where you're seeing the sell-off as the most acute, down about 0.5%. But risk sentiment certainly rolling over from what we saw earlier this week. Let's go to another story that we're monitoring very closely here in Europe. The centrist Democrat 66 party looks set to play a key role in forming a new Dutch government as its support nearly tripled in parliamentary elections. Losses, meanwhile, for the country's figurehead of the far right. Let's get a little bit more context here. Bloomberg's Oliver Crook is live on the ground in Amsterdam. Ollie, just set the stage for us here. This was a complete turnaround from what we were expecting.
Yeah, absolutely. And I think Dutch politics are fairly interesting and fairly distinct from what we see across the rest of Europe. For one thing, we talk about European fragmentation within politics. I mean, this is ground zero for that. You have 15 parties that are represented in the parliament. You had almost 30 parties that were running to vie for seats. And basically, you need 0.67% in order to get a single seat. And then you basically sit in the parliament, which is why you've had, for the last basically 5 years, about 40% of the time you've been stuck with caretaker governments. What they hope to end that is that sort of tradition within Dutch politics, where basically you've been stuck, haven't been able to make a lot of progress on long-term policy goals. And currently what we've got now is a tie between Geert Wilders, the far-right sort of firebrand, very anti-immigration, anti-Islam, and he lost a large proportion within the parliament. So now you have basically this tie between the far-right and the centrists. But remember, he pulled the plug on the last government. No one from that I've spoken to is going to be willing to basically enter into coalition with him. So the likely outcome here is going to have a centrist government that is going to lean potentially more to the left, though the center of gravity is still a little bit still to the right within Dutch politics. But what it will mean, obviously, sort of for the domestic politics, the main issues here are obviously on the economy, the cost of living. Immigration has been obviously top of the agenda, but also the housing crisis that we're seeing all across the rest of Europe. But when it comes to the broader European context, what we are going to get very likely over the next couple of months is a government that is much more pro-European, much more constructive when it comes to Europe. But even many of the parties on the right have changed their tune on this question of joint debt at the European level, particularly to pay for defense. We saw the Christian Democrats, for example, change their policy platform really over the last 6 months to say they're basically on board, and that is really significant, as you guys know, because the Netherlands, standing as one of the frugal four, has really been opposed to this idea. So really progress on the larger European context on this issue of joint debt and Eurobonds.
Ollie, the Netherlands has felt recently like it's trapped between China and the United States. Does this election change that? Does it change the tone of how the Netherlands thinks about the relationships it has with both Beijing and Washington?
Well, what it will give is hopefully a strong government that can govern for the next 4 years, and as a consequence, come up with a sort of coherent game plan with how to sort of position itself. Because I think you're absolutely right, Guy, and everybody we speak to really has this as one of the prime risks here for the Netherlands. You have this sort of stuck between China and the United States, drawn really to home by this issue with Nexperia that we saw over the last couple of months, where the Dutch government effectively took control of this chip company from a Chinese owner in order to basically prevent it from, they were concerned, of being gutted. You had the same issue with ASML. There is also, however, Guy, an opportunity in this. Are there really any other companies within Europe that are so sort of monopolizing of a single, absolutely crucial part of the manufacturing and the semiconductor infrastructure across the world? There is not. So if a government that can speak coherently, that can get more on Team Europe at the European level, may have more sway in some of these geopolitical issues where the United States actually needs them, particularly on this question of ASML. So there is an opportunity here. There is, of course, also a risk.
Oliver Crook in Amsterdam, connecting the dots for us on the political space in the Netherlands with, of course, the corporations that we keep an eye out of Amsterdam. We thank you so much. Let's stick with the tech theme because it is very much on the agenda for today. We do have Apple and Amazon reporting after the bell, alongside some data that's going to be hitting the wire, plus, of course, the ECB rate decision right off the heels of the BOJ and the Federal Reserve. But let's circle back to that tech story because you're seeing some massive moves already in the pre-market when it comes to the ones that reported yesterday.
Absolutely. Meta's one that really stands out to the downside. Big moves in Meta. The argument seems to be something like this from shareholders. You've got our money. Are we really sure that we want you spending our money in the way that you are currently? The CapEx bill over at Meta is absolutely enormous. Now, Microsoft is also kind of, you could argue to a certain extent, in that camp as well. What was interesting is that Alphabet stood out as being a much more positive picture. Its ad business is doing well. It can kind of fund the spending out of that. In terms of what we're seeing pre-market, as you can see, there's some fairly big moves. Like Meta in particular is moving to the downside. Matt Bloxham joins us now to discuss all this. Is that the right message? Basically, shareholders going like, you got our money. We're not entirely convinced that we want you spending it in the way that you are at the moment.
Yeah, I think that's right. I mean, obviously, but all three companies beat on revenue, but I think certainly for Meta and Microsoft, the beat wasn't enough to align with the spending plans, and certainly for Meta. And I think my assessment would be that Mark Zuckerberg's commentary about future spending a bit too cavalier for what the market wants to hear. That, you know, it doesn't so matter so much if we spend more than we need to, we can maybe resell some of that capacity to other players. I think investors are looking for a much sharper assessment of what the return on investment is. And I think when you look at the operating performance, their large language models are lagging Gemini and OpenAI by quite some distance in the corporate environment. So I think the market's looking for more evidence that they're closing that gap.
Talk to us about Alphabet here, because they are coming out on top in a very big way, but they haven't even uttered the words artificial intelligence, really, to the extent that their peers have. They're still talking about cloud.
Yeah, they are. And obviously, cloud, does cover AI too for them, and strong performance there. Their cloud business was up 34%. They've registered a number of billion-dollar-plus deals. I think the market's confident that they've got momentum there. Obviously, they're the number 3 player after Amazon and Microsoft in that market. I think the other thing with Google is that their core advertising, their search business, which people worry is at risk from ChatGPT, is holding up well. Gemini is 650 million active users now. So I think overall their platform's proving to be more resilient than people were concerned about.
Amazon, Apple, later. We're going to watch those. Just 2 seconds. What are we?
Apple, it's all about the momentum behind iPhone 17. Market's looking for strong performance across the world, but particularly China. Amazon, it's again the similar story of cloud growth and what their forward spending plans are. And obviously, Amazon's also cutting headcount, so there's a range of issues there for them to deal with.
Busy day ahead. Matt, great stuff. Thank you very much indeed. Matt Bloxham, Senior Tech Analyst for Bloomberg Intelligence. NVIDIA is also fairly flat. Big jump yesterday. Holding on to it, which is interesting, given the fact that actually it wasn't mentioned really as part of the Trump-Xi conversation. So I'm surprised it's kind of holding on to those gains, but it is at the moment.
Yeah, well, we're still getting trickles of what's coming out of that meeting and that readout. So I wonder if that's something that maybe gets a little bit more attention either to the upside or the downside as we get closer to the opening bell in the States. It's been a fascinating show to put together. I mean, from the trade to the central banks to the earnings on both sides of the Atlantic.
Okay, we're done. We're going to hand things over to the States. The opening trade is done, but the brief is next, right there in London. This is Bloomberg.
In case you missed it on the opening trade.
Kit, I've got a present for you. I know you've mentioned it a couple of times. We've got a coffee for you.
Hang on a sec.
By the
Coffee
lovely Tara.
coming. There we go.
Thank you.
So my question now is, how much froth is in there?
See, you can't tell when you look at the top. That's okay. You've got to drink it to find out.
Absolute genius. You got to take the lid off before you even figure out what's going on.
Don't miss the opening trade. Live every weekday.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Lizzie Burden outside Windsor Castle, England, and this is Bloomberg.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question. Great question. I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
In case you missed it on Bloomberg Tech Europe.
Well, I would argue that our odds are pretty good at winning a big market share. But of course, some incumbents will manage to reinvent themselves, right? I think Jamie is on to something really exciting. He's trying to do it now. Solomon was trying with Goldman Sachs, but then kind of Marcus, was thrown out when the fintech valuations dropped down. A lot of banks stopped their aspirations in fintech, and now they're waking up to that fintech never died.
Don't miss Bloomberg Tech Europe every month.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
It's 5 a.m. in New York City. Good morning, I'm Vonnie Quinn with your Bloomberg Brief. Here's what you need to know. Amazing summit. President Trump hails the meeting with President Xi Jinping that's resulted now in a détente, apparently, and a pause on rare earth restrictions. Far from certain. Fed Chair Powell says a December cut is in no way a foregone conclusion. Yesterday's cut saw 2 dissents, opposition to the decision on both sides. And Amazon and Apple earnings on deck after the market close as investors digest results this morning from Alphabet, Meta and Microsoft. So we finished the day yesterday with the S&P unchanged, the Nasdaq 100 up 0.4%, but to some extent it's a little irrelevant today with everything that the market has to digest. Now we did get that rate cut from the Fed chair, but also an amber light on December. So it remains to be seen how the market, in particular the bond market, reflects that. This morning you can see we were pointed green, particularly for Russell 2000 futures. We did get that cut. We also got a massive amount of spending from 3 of the big tech companies in different parts of the market. We have Ed Yardeni saying that perhaps the Fed didn't want to add to these animal spirits, and he would agree with that impetus if that's what some of the impetus was from the Fed Chair Jay Powell, but also questions out there as to just how much of a consensus there is on this Federal Reserve. So as you can see, the 2-year yield pretty much unchanged, 3.58. The 10-year yield right up to 4.06, and the 30-year yield at 4.62. So we are getting that steepening again, particularly at the shorter end of the curve. We'll get into all of that this hour, but let's get to some individual movers now with Kriti Gupta. Kriti.
Good morning, Vani. We are, of course, deep in tech earnings season, as you suggested. The winner so far is Alphabet. Shares higher by 7.5% this morning. This is a really big beat when it comes to their cloud business. Remember, Google, Alphabet, is the third largest player after AWS and Microsoft's Azure. So really getting some of that market momentum is a big, big win for Alphabet's bottom line, especially when this is a stock that's usually quite correlated with marketing budget and ad spend. So it looks like investors really rewarding it for that kind of pivot. On the other hand, when you keep sticking with the tech picture, Meta not having such a great day. Remember, we've seen this movie before where they talk about going big on a new theme. They used to talk about the metaverse. Now they're talking about AI. The market isn't believing that they can really come and deliver when it comes to that massive CapEx spend, down about 7.5% for those Meta shares. We should end with the favorite, maybe not having such a good day. Chipotle, a similar theme. Yesterday I was here talking about how no one's buying Oreos for Mondelez anymore. It's a similar story for Chipotle. Those shares are down 18%. The CEO saying people just aren't spending as they start to feel the pinch, and that's really reflecting in their bottom line, Bonnie.
Yeah, cutting the full year outlook for a third time, it is very concerning. Kriti, thank you so much. Kriti Gupta. And coming up this hour, Marieke Bloem of ING discusses the Dutch election and a closer look at the Fed and the BOJ rate decisions with Rabobank's Jane Foley later this hour. Well, after days of build-up, President Trump meets with President Xi.
I thought it was an amazing meeting. He's a great leader of a very powerful, very strong country, China. And what can I say? We have, it was an outstanding group of decisions, I think, that was made. A lot of decisions were made, too. There wasn't too much left out there. And we've come to conclusion on many very important points.
And President Xi echoing the sentiment.
This development goes hand in hand with your vision to make America great again. Our two countries are fully able to help each other succeed and prosper together.
Witnessing détente in action there, well, China has now officially confirmed it has reached a one-year truce on tariffs on rare earths in particular. Joining us now from Busan, South Korea, where the meeting took place, is Bloomberg's Stephen Engel. So, Stephen, a raft of superlatives. The president telling reporters, I guess on the scale from 0 to 10, I would say the meeting was a 12. And an outstanding group of decisions we just heard. So what are the deliverables?
Yeah, so they didn't necessarily talk about or deliver all the items that Donald Trump sort of telegraphed yesterday when he was sort of previewing this highly anticipated summit with Xi Jinping, which lasted about an hour and 40 minutes this early afternoon, or late morning it actually was, 11 o'clock to about 12:30 or so local time. They did reach agreement on the rollback of reciprocal tariffs that they both have been adding to each other in reciprocal manner since Liberation Day, including the biggest lever that China really found it had, and that was on critical minerals and rare earths and magnets, key critical components to America's supply chain, also Europe's supply chain in the automobile industry. So China, and we got a confirmation as well through officials in Beijing after that meeting was finished, that Beijing will put a pause on its more tightened export controls on those critical rare earths for at least a year. The United States also has agreed to roll back some of their export controls in a truce for about a year. There was a victory as well on soybeans. Donald Trump saying China has pledged to buy a tremendous amount of soybeans. It might be a little bit late in the harvest now, but it looks as though China already is going to be ramping up their purchases of soybeans. And again, there was other issues that could be seen as a deliverable. TikTok wasn't necessarily discussed, but later Beijing officials say they're going to be working very closely with U.S. officials to find an equitable solution to the TikTok sale. Again, the sticking issues are going to be on the data, about the ownership structure, and the algorithms, Vani.
Yeah, so Stephen, a lot of positive words like cooperation on trade trade out of China as well. And, you know, invitations. So the president saying he's looking forward to visiting China, and he invited the premier to the White House. Now, it's important that this good feeling continues until at least the next meeting, right? What can we expect in terms of when a next meeting might take place?
Yeah, that's right. So both leaders have invited the other to each other's country. Donald Trump saying that he has been invited to come to China. I think the dates they're talking about now perhaps are going to be in April. So yes, that's the next date on the calendar we need to circle to see how they can take some of these agreements that were initiated in that framework agreement in Kuala Lumpur and then more solidified through that goodwill that they saw across the table today. Can they propel that further? Because really the foundation issues of competitive adversaries, if you will, are still there. So they need to be resolved. Now, one issue, obviously, that the Chinese would have liked to have seen resolution or at least a movement on, and that is access to the more advanced AI accelerators. And Donald Trump yesterday talked about we might allow the top-level NVIDIA Blackwell chips to be sold into China. We could lift that restrictions. He was alluding to the possible bargaining chip. But again, he said that was not brought up, the Blackwell chips. They did talk about other products from NVIDIA. I assume it's the H20, the more watered-down version that China itself has decided is a national security threat, and they blocked it from coming into China. So there's still a lot of room to go on those American export controls of the most advanced chips.
Stephen, thank you so much. That is Bloomberg's Stephen Engel there for us all week. Turning to tech now, shares of Meta and Microsoft extending post-earnings declines as both companies are continuing to spend big on AI. Meanwhile, Alphabet is rising after a surge in demand for its cloud services. Let's bring in Matt Blothcombe of Bloomberg Intelligence for more. So that's the story right there, Matt, right? You know, a company that can depend on clients for revenue gets rewarded, and companies that are just spending, AI spending gone wild, literally up 89% among all three companies from last year, getting punished. I mean, should we be getting more nervous?
I don't know whether more nervous, but certainly I think the nerves are definitely still there, and I don't think the question marks about an AI bubble are going away anytime soon. I think there's a bit of nuance between each of the companies. As you say, revenue actually did better to the upside across all three, but certainly it was much stronger than expected for Google, and particularly in their cloud business, growing 34% year on year and signing a lot of billion-dollar-plus deals. So I think there's confidence that their momentum to close the gap. They're the number 3 in cloud behind Microsoft and Amazon. That momentum is improving. I think at the other end, you've got Meta, where revenues are a bit better, but not massively better, and perhaps some slightly cavalier commentary from Mark Zuckerberg about spending more money, and it's not so bad if we spend more rather than less. There'll be ways to figure out how to get some kind of return on that investment sometime in the future. So I think definitely spooking investors a bit. And in the middle, you've got Microsoft, where a better than expected revenue growth, but they still aren't spending enough to unlock fully the demand that's there. So I think a bit of frustration there from investors that they're leaving customer demand on the table that's perhaps getting sucked up by the likes of Google, and that even to kind of close that gap, the capex having to spend is more than expected. So they spent $35 billion of capex in the quarter. The market was looking for 30. So yeah, nuances across all three of them.
On the calls, all of the leaders really trying to out-rhetoric each other, if you like. Zuckerberg talking about the right strategy to aggressively front-load building capacity. Sundar Pichai, in fact, also speaking, in massive terms. But Satya Nadella said that Microsoft is building planet-scale cloud infrastructure. It all seems a little ludicrous when Zuckerberg also said that the 3 avenues for money-making are basically advertising, commerce, and subscriptions. I mean, can we depend on AI to bring in that much revenue?
So it's a good question. I think if it can, then it's almost like a kind of transition. That big advertising market exists, that big subscription market exists. So there's like rivalry between the existing players and the likes of Meta. Obviously, Meta's also looking to get into the advertising agency space with their own AI tool. So there's obviously a WPP report today with weak earnings down quite significantly, and so that whole industry is potentially at risk from these new technologies. So there's a lot of different industry sectors that are kind of bumping up against each other right now and creating friction.
So slightly different types of companies, but Apple and Amazon to report later. What should we be looking for immediately, Matt?
Yeah, Apple, I think the focus is really on iPhone 17 and whether it's really living up to these kind of expectations that it's getting strong demand from customers, not just in the developed world, but in China too. So that's the big focus there. Amazon, again, will be very similar about the cloud momentum and whether they're starting to lose share to the likes of Google and how much more they're going to spend to kind of maintain the capacity growth. Obviously, we get with Amazon a look into the real economy with their retail online business. They're also cutting costs, and there's a big question mark about how much of that headcount reduction is linked directly to AI or whether it's just an overhang from the pandemic where they seem to overhire.
Matt, thank you so much. Matt Bloxham there of Bloomberg Intelligence. Now to other top stories trending on the terminal this morning. Novo Nordisk has made a higher offer for obesity startup Metsera to consolidate its position in weight loss medications. Sources telling Bloomberg that Novo, which had earlier made a takeover proposal for Metsera before the US company reached a deal with Pfizer, has come back with another offer with an improved value and structure. Stellantis expects one-time charges in the second half of the year as political, economic and regulatory pressures force the automaker into making strategic changes. The warning clouded an otherwise positive third quarter, with Stellantis reporting a 13% jump in net revenues. UK Chancellor Rachel Reeves has apologised for renting out her family home without a licence after entering office last year. Reeves wrote to Prime Minister Starmer on Wednesday to say that she had not obtained a permission that she had newly understood to have been required for her property in South London. Starmer's independent advisor told the Premier that further investigation is not necessary. Coming up, we discuss that rate decision and also the BOJ rate decision and the results of the Dutch election with Marieke Blom of ING Research. That's next. This is Bloomberg.
You missed it on the opening trade.
Kit, I've got a present for you. I know you've mentioned it a couple of times. We've got a coffee for you.
Hang on a sec.
By the
coffee
lovely
coming. There we go. So my question now is, how much froth is in there?
See, you can't tell when you look at the top. That's okay. You've got to drink it to find out.
Absolute genius. You got to take the lid off before you even figure out what's going on.
Don't miss the opening trade, live every weekday.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question. Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Francine Lacqua in Sintra, Portugal, and this is Bloomberg.
In case you missed it on Bloomberg Tech Europe.
Well, I would argue that our odds are pretty good at winning a big market share. But of course, some incumbents will manage to reinvent themselves, right? I think Jamie is on to something really exciting. He's trying to do it now. Solomon was trying with Goldman Sachs, but then kind of Marcus, was thrown out when the fintech valuations dropped down. A lot of banks stopped their aspirations in fintech, and now they're waking up to that fintech never died.
Don't miss Bloomberg Tech Europe every month.
We continue to face two-sided risks. In the committee's discussions at this meeting, there were strongly differing views about how to proceed in December. A further reduction in the policy rate at the December meeting is not a foregone conclusion. Far from it.
Dissent among FOMC members continues, with officials on both ends of the policy spectrum opposing the quarter-point cut. Investors now turn to Italy, where the European Central Bank is expected to leave rates unchanged. Joining us now is Bloomberg's Oliver Crook with a special guest, ING Chief Economist Marieke Blom. Ollie.
Yeah, that's right. So listen, we talk about fragmentation in politics. That's certainly what we've seen in the Netherlands. We've also talked about fragmentation at the FOMC board of the Federal Reserve, and that's where I'd like to begin with our next guest, who's the chief economist and head of research at ING. Just beginning, before we get into the sort of domestic story here and what we've seen in the election, what you made of what we heard from the Federal Reserve last night and the sort of trickle through we're going to see into Europe.
Yeah, well, no big surprises there, right? With a 25 basis point cut, we'd say, okay, that's fully explicable by housing rents coming down, by energy prices being lower, and of course you see the labor market weakening significantly, so also less pressure from wages. And in that sense, that's not really a surprise, nor is it specifically concerning. That's not the first thing we're watching.
And what were we watching here now? We have a new government, we have a new election, we don't yet have the government. There's going to be potentially protracted negotiations. What is your expectation? What does the market want to see from this new government?
Yeah, well, what everyone would love to see is a stable government which will govern for the next 4 years, which will set a direction, which businesses can take into account when they're making their business decisions. That's not what we've seen over the last couple of years. We've seen sort of like zigzagging governments from one end to the other, but also voters, right? So it's a very fragmented political landscape, and that's why it's very difficult for those parties to make compromises, to form a coalition, which is, of course, a big concern from the business community.
And something that potentially didn't play as much in the domestic story, but I think for the global audience and certainly for the European audience, is going to be the Netherlands' role within the European Union. We're expecting a more constructive relationship with the EU. What does a more constructive relationship look like, and how significant is it if the Netherlands is now ready to get on board with joint debt at the European level?
So this is a very significant shift in what voters have voted for. So the parties they voted for are definitely way more pro-European than what they voted for previously. And also a coalition that we saw over the last period was very Euro-critical, so to speak. So what do we expect from that? I think it's supportive that they're part of political families. So the largest parties, which are likely to form a coalition at some point, are part of political families, which is important to basically, the tech sector is very important for the Netherlands, and that way they can protect the Dutch tech sector as a European treasure, basically, together. I think that's one important thing. The second thing is the stance on Eurobonds, on common debt. I don't expect sort of like any sort of real debt sharing to happen, but for new projects, like with defense spending, what we've seen before, but maybe for infrastructure, for additional spending, I think it would be something that this coalition could consider, but it would always be gradual, conditional, basically making sure that moral hazard is as low as it can be.
Which is significant. I mean, 5 years ago, you ask about, I think, much of this political landscape here, they say no way, and you've seen certainly an evolution on that. But I want to talk a little bit more about the tech sector that you've just highlighted there. We've seen some pretty spectacular moves out of the Dutch government, taking control of Nexperia. Obviously, ASML, the sort of crown jewel of the business community within the Netherlands, is certainly stuck between China and the United States. How do you see that playing out, and how much of a risk is that to the Dutch economy?
So the tech sector is of vital importance to the Dutch economy, and of course, from a geopolitical perspective, to the European economy, to European strength. And in that sense, I think it's something important for a new government to fully sort of like embrace, take a stance on, which I expect that they will be doing, and liaising also with other European nations on how to determine their stance. Because so far, it's been, relatively speaking, it's the Netherlands that has this strong tech sector. It hasn't really been seen as part of a bigger European play, and that's what I mostly expect from a new government, that they will do it more in European cooperation.
And how concerned are you about a bubble within the AI, within technology, and how susceptible is the Dutch economy to that?
Well, I think mostly from the indirect effects in the US. So if we would see that bubble burst, the wealth effect in the US, the infrastructure spending effects in the US, that could have an effect also indirectly via the financial markets on Europe, more in general. I think for ASML and the consequences and so forth, of course, that makes a bit of a difference, but it wouldn't necessarily be a shock in that respect, because we will still need ASML chips machines.
Well, Marieke Blom, thank you so much for your time. Greatly appreciate it. Lady. That's the head of research and the chief economist at ING, the biggest bank within the Netherlands. The Netherlands, which obviously, though this has sort of been a very domestically driven economic and election campaign, sitting right at the center of that tech ecosystem being pulled between China and the United States.
Absolutely, Ollie. Thank you so much. That is Bloomberg's Oliver Cook there with his guest, Marika Blom. Coming up, a look at what else is making headlines. We'll have your front page news next. This is Bloomberg.
Eternal life, a concept that has captivated the imagination of humans since the dawn of time. I'm David Rubenstein. The advances that have been made in science recently has made it possible for people to live much longer than they would have otherwise lived decades ago. With innovation exploding, it's harder than ever to know what's real and what's just hype. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life.
It is at the front and center of what we're trying to resolve and understand.
Americans need to know they're at risk of dying from the next pandemic.
What we really need in our lives is to build community.
Knowledge is power. The generation before us, cancer was considered a sign of weakness, and many never talked about it.
Longevity without health is not valuable, but if you can maintain health, people are productive when they're older.
Join me on a 4-part journey as I explore the great quest for longevity. New episode Tuesday, only on Bloomberg.
What is going to be the consequence for U.S. markets?
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Power, money, culture. Haslinda Aman tells the story of Asia's rise through the people who are helping to shape it. On this episode, building a global hospitality empire. How Chef Nobu reinvented the business of fine dining.
The restaurant concept and the hotel concept, for me, the same. I like to make happy to guests. My philosophy is always quality food, quality service, most important, heart.
Encore presentation this weekend, only on Bloomberg.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. Time now for your front page news. First up, on the New York Times, Hurricane Melissa began churning through the southern part of the Bahamas last night after carving a path through the Caribbean. Officials said more than 20 people were killed in Haiti and 5 bodies have so far been recovered in Jamaica. The UN said more than 1 million people there were directly affected by the storm. Next, the Wall Street Journal leading with President Trump ordering the Pentagon to start testing nuclear weapons on an equal basis with Russia and China. The Journal says it's unclear whether Trump is referring to the testing of nuclear warheads or the missiles and other delivery systems. Trump later told reporters the impetus for this decision didn't relate to China nor his meetings with the Chinese premier. And finally, on the front page of the Washington Post, President Trump saying he has authorized South Korea to build a nuclear-powered submarine. That would allow the country access to military technology possessed by few other nations. South Korea's President Lee Jae-myung had asked President Trump to allow the country to acquire fuel for nuclear-powered subs. All right, we have a lot to digest in this market this morning, so let's take a look at where we stand. Macro-wise, futures were a little bit undecided. We're down on the S&P 500 and NASDAQ 100 futures And you have to wonder if it's just this market deciding what to do. We have 4 hours, after all, until the open, because we have all those earnings to digest. Also, the Fed rate cut with 2 dissents. I did want to point to the 10-year yield rising substantially, the dollar index stronger, yen much weaker today. Coming up, we're going to talk about those central bank decisions. This is Bloomberg.
Estava sitiada.
Nisso eu começo, eu tremia, não sabia o que fazer. Foi a mais terrível que eu passei na minha vida.
Eu temo, né, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home, they are suffering. And someone is driving a Range Rover with their money.
Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being $1 billion business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Lizzie Verdon outside Windsor Castle, England, and this is Bloomberg.
It's 5:30 a.m. in New York City. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. Amazing summit. President Trump hails the meeting with President Xi that's resulted now in a détente and a pause on those rare earth export restrictions. Far from certain, Fed Chair Powell says a December cut is in no way a foregone conclusion. Yesterday's cut saw 2 dissents, opposition on both sides. And Amazon and Apple earnings on deck after the market closed today as investors digest results this morning from Alphabet, Meta, and Microsoft. And to that effect, we are seeing futures lower, but fractionally lower, and we are 4 hours away from the trade open. And if you look at the Russell 2000, well, futures are higher. That's largely thanks to that rate cut yesterday, but it was a bit of an equivocal rate cut, right? There was a dissent on both sides from Schmidt and also from Myron. You also have Yardeni this morning saying that perhaps Powell didn't want to, add fuel to this stock market fire, perhaps to these animal spirits. At the same time, Powell putting an amber light on any December cut ideas, saying, look, we don't know yet. We're driving in the fog here. We don't have data, and let's just hold our horses for a minute. That didn't prevent the yield curve from steepening. We have the 10-year yield now back well above 4 at 406.60, and the 30-year yield well above 462. I just want to point to the yen as well, because we're much weaker today by about 0.7%. We also had, of course, a BOJ decision. The BOJ stood pat, and we have Ueda saying, look, he's not going to hike just to give the stock market a boost. So two very different stories in either country. Let's get to some individual movers now with Kriti Gupta in London. Kriti.
Good morning, Vonnie. Tech earnings, of course, coming at us fast and furious. Let's start with a big winner here. Alphabet shares rallying this morning, 7.8% of a rally. This is a really big deal when you look at how Google is actually responding. There are three major players in the cloud business. It's Microsoft's Azure, Amazon's Web Services, and of course, Alphabet comes in third. The market really lauding the fact that they are not only gaining market share, but they're seeing better than expected growth in the cloud unit. So that's what's showing this pop in those shares. But it is not all good news for everybody. Meta is another one that we've got our eye on. It's about the same margin of a reaction, but to the downside. Remember, the CapEx story is something everyone is very sensitive to when it comes to the tech space, and we've seen this movie before with Meta. When they've gone all in on a concept, the metaverse, of course, there are questions now when it comes to the analyst community about whether their big AI spend will actually yield results. Those shares down almost 8% on the day. I've got to stick with my Debbie Downerness, Vonnie. Let's talk with Chipotle. It is your biggest pre-market mover to the downside, down a whopping 17%. They're cutting their outlook for a third time this year. Fascinating story. They're talking about the consumers feeling a pinch and that eating into their ability to actually turn more customers into their store. So those shares getting punished, down almost 19% as we speak, Vonnie.
And down 34% year to date, Kriti. Thank you so much, Kriti Gupta there. Opposition hardening at the Fed, with Myron and Schmidt dissenting on either side of yesterday's 25 basis point cut.
We continue to face two-sided risks. In the committee's discussions at this meeting, there were strongly differing views about how to proceed in December. A further reduction in the policy rate at the December meeting is not a foregone conclusion. Far from it.
Chair Powell also giving short shrift to the view that a December cut is a done deal, saying it's far from certain. Meantime, the yen is weakening after the BOJ stood pat. Two dissents at that meeting too. Joining us now is Jane Foley, head of FX strategy at Rabobank, to talk about it all. First, the Fed, Jane, and thanks for joining. Is Powell's consensus declining? It's obviously a very thin consensus right now. Is he becoming less persuasive as a chair?
Well, thank you for having me. Well, you know, that's very difficult to tell right now. I think it's fairly natural that there are going to be a different amount of views within a committee, particularly at a time when you have very little official data or no official data at all. So from that point of view, I think it's probably quite healthy that there is room for discussion. I mean, you can look back at the market and say, well, why was the market, so convinced that there would be a December interest rate cut, just a few days ago? Because, again, the market doesn't have the data either. So I think it was probably appropriate for there to be different views in the Fed, for them to discuss the different options, and then basically to say, we can't make up our minds at this point about December. We have to wait for the data. And I think that's what Fed Powell yesterday was reminding the market of, and I think that's a reasonable position.
Yeah, except you could say it's partially the Fed's fault that the market was so convinced, right, Jane? Because the Fed had been starting to get what seemed to me to be extremely worried about the labour market side of the mandate.
Yeah, that's right. And the market really had taken that cue, and perhaps this is why Powell felt that he needed to put the brake on that. Now, we did get some commentary yesterday from Powell on what he's thinking about the labour market, and that was important. That was one of the things that the market was watching for, and he did say, yes, there's a supply side factor here, there's a demand side factor, but, crucially, he did say that, whilst he saw and recognised that loosening in the labour market, he wasn't looking for an accelerating trend. So a moderate cyclical loosening in the labour market, nothing that he appears to be panicked about right now. But of course, like everybody else, he's waiting to see what the official data will say once it is released.
Yes, assuming it's released this side of the end of the year, we might get 3 jobs reports, all at once before the next Fed meeting. Powell did say we're 150 basis points closer to neutral now, wherever that may be. And that this might mean that there's a growing chorus of maybe we wait a cycle. So what if the Fed does start to look like it might cut in December? Does that then panic the market?
I don't think it will necessarily panic the market, because a lot of economists out there are already forecasting, that they will. But again, we do need clarity. But this is what the data is for, and this is what the data cuts through, some of that fog. And right now, of course, that fog is just staying around. It's a little bit heavier than normal. But, if we look through next year, there is still a lot of interest rate cuts in the price. So from that point of view, I think, one thing that would surprise the market is if, when the data is released, it shows a more resilient economy. I think that's something which perhaps would surprise the market even more.
At that point, Jane, would you begin to be more concerned about inflation? The Fed chair, again, sort of dismissing it as perhaps a one-time price shock, adding, between 0.2 and 0.6% to the official number, which would mean that we mightn't be as high at all as we are on inflation. But there could be a shock there in the waiting too, right?
They absolutely could. I mean, technically, from economic theory, that's what tariffs do. They raise inflation. But the consensus right now appears to be, well, look, we haven't had an awful lot of inflation coming from tariffs. So what are firms going to do? Or perhaps rather than, price or their goods more expensively because consumers, for whatever reason, won't accept that, that's where the weakness in the labour market is expected to come from, because instead of that, firms have thought, well, maybe we won't hire so much, maybe we'll lay some stuff off. So that's where the market is right now, wondering or worried that the labour market will take the brunt perhaps of those tariffs. But we need the data really to clarify the view either way.
Where does this all leave your view for the US dollar, given that DXY is above 99 now, and we have a yen after that decision and those comments in particular from Ueda that's close to 154, Jane?
Well, with respect to the dollar, first of all, I should point out that it is almost the best performing G10 currency this month. I think the Swedish krona has just pipped it to the post there, but it's performing really well. And actually, the second half of this year, it's been really very stable. The weakness that we had was earlier on in the year, and that really hasn't intensified. And of course, that will be guided by Fed policy further down the line through to December. But with respect to the yen, that's another very interesting currency, because just as the market perhaps had expected Fed Powell to throw that door open to a Fed cut in December, the market perhaps had thought that in the Bank of Japan they would throw the door open today for a hike in December, and we didn't get that. So from that point of view, the market has sold the yen today. It's a little bit worried. But again, that's another central bank that's data dependent. It's waiting for the wage data as well. And the other thing that we should say about the Bank of Japan is, the law, the Bank of Japan Act says, yes, the Bank of Japan is independent, but there needs to be good communication from the government and the central bank. Now, the Prime Minister has been in office for a very short period of time, and in the few days that she's been there, well, she's had to arrange a very important meeting with Trump. So perhaps there hasn't been time for that communication to take place yet. So I think with the Bank of Japan, could they hike in December still? Well, yes, they could if they get the right data.
All right, we cannot wait for some of this data to come out. Jane, thank you so much for joining. That is Jane Foley of Rabobank. Now to other top stories trending on the terminal this morning. Novo Nordisk has made a higher offer for obesity startup Metsera to consolidate its position in weight loss medications. Sources telling Bloomberg that Novo, which had earlier made a takeover proposal for Metsera before the US company reached a deal with Pfizer, has come back with another offer, an improved value and structure. Germany's economy stagnated in the third quarter, avoiding recession but falling far short of the surprisingly strong expansion recorded in France. Meanwhile, the French economy unexpectedly grew at the fastest pace since 2023, defying concerns that would have come from political turmoil. And 5 more people have been arrested in that Louvre heist case, the Paris prosecutor said yesterday, after 2 alleged members of the group that stole jewels from the museum were charged. Authorities linked one of the new individuals detained to DNA found at the museum. Coming up, President Trump and Xi finally meet. We'll discuss the details of the meeting and the deals made next. This is Bloomberg.
investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories.
The economy has been doing well. That does not tell you what the future is going to be.
We are taking a step-by-step approach, a very systematic approach with India.
This is a time to put a little more defense into your portfolio.
Insight with Haslinda Amin. New 2-hour programming beginning November 3rd. Only on Bloomberg.
Power Players is back to take a look under the hood of the business of Formula One.
Hi, I'm here to see Pierre Gasly.
Welcome to my workplace.
Do you feel pressure?
Massive pressure.
Ferrari is the best example that we can be very proud of the past to look after the future.
From the iconic brand setting the standard,
Oh boy.
can you imagine Ferrari without racing?
No, and I say no, no, no.
To the newcomers forging ahead.
I grew up my whole life racing against the boys.
This global phenomenon continues to chart new territory.
This was a tennis court 8 days ago.
I can't even believe that.
And the speed of the business has never moved faster.
My career might stop, but I'll still be driving some.
Yeah. Probably very fast.
Yeah.
This is so exciting!
This season, we're along for the ride.
I'm David Weston. Join me for the next generation of Wall Street Week. This week, special contributor Larry Summers on the Fed decision and the Trump-Xi meeting. What President Milei's victory in Argentina means for investors and for the United States. And the godfather of AI, Jeffrey Hinton, on why what he helped create could mean the end of us all.
We should be a lot more worried than we are. How are we going to coexist with these things?
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. A mixed bag in the latest big tech earnings. Shares of Meta and Microsoft falling in the pre-market after big AI spending sprees. Meanwhile, Alphabet rising after a surge in demand for its cloud services. Joining us now is Mandeep Singh of Bloomberg Intelligence. So Mandeep, very different reactions. You know, are we getting too concerned about spending? I mean, if they've got the ability to spend, let them spend, no?
Well, if you listen to Microsoft and Alphabet, they called out, being supply constrained at least through first half of 26, and that's why they're raising their capex. And the numbers actually look pretty solid. In Meta's case, even though they called out supply constraints, it's still unclear what the exact ROI is when it comes to, all the investments that they are making. And all three players would be probably spending more than $100 billion in capex next year. So from that perspective, it's harder to see the imminent ROI with Meta. But with Alphabet and also with Microsoft, I mean, the cloud numbers show the ROI when it comes to all the AI capex, and I think it's justifiable. So, the fact that Microsoft is down is just a function of valuation, and really, 39% growth for a $23 billion quarter in Azure, that's spectacular, and I think it's more of a digestion at this point of time.
Yeah, it's not bad. Zuckerberg also saying the three avenues for money making, because he was obviously asked about it, are advertising, commerce, and subscriptions. Will all of that, plus I imagine some cost cutting due to labor efficiencies and so on, will all of that warrant all of this spending, do you think, Mandeep?
I think with Meta, you really have to wait for their model to catch up to the other frontier models. Like Gemini has caught up with OpenAI, and that's why you see, Alphabet doing so well. Even in the core search business, they grew 15%, whereas everyone was expecting core search to be disrupted. So model intelligence is what matters, and I think both Microsoft with OpenAI and Gemini have that model lead. In the case of Meta, you want that model intelligence to catch up first, and then it will show up in monetization, whether it's through, some sort of Meta AI adopts their new app, but it's some sort of Meta AI adoption, or Vibes, that's their new app. But it comes down to how good their model is versus the rest of the peers.
Yeah, Gemini with 650 million monthly users now, ChatGPT 800 million. Let's look forward to Apple and Amazon later in the day. I guess something a little bit different, right? What should we anticipate from those two, Mandeep?
Yeah, I don't think, none of them will really have a big surprise, simply because when I look at the cloud backlog, Microsoft Azure and Google Cloud are growing much faster. And so from that perspective, I think Amazon AWS will probably have inline quarter. And I don't see that acceleration in AWS that we saw with Google Cloud and with Azure. So that's one. And Apple, look, I mean, they had a nice quarter in iPhone unit shipment sales last quarter, but to my mind, there could be a pull forward element when it comes to Apple's iPhone unit sales. And yes, iPhone 17 has done well, but it'll be very hard for them to, grow into 2026 without a big tailwind from AI, because Apple has underinvested in AI, and they just need to find a way to, have an alliance with a large language model, whether it's from Gemini or Anthropic or OpenAI, to really drive those AI capabilities. In the end, that will be the biggest driver of iPhone refreshes. And so to my mind, there'll probably be inline results for both Amazon and Apple.
All right, we'll be watching out. That is Mandeep Singh there of Bloomberg Intelligence. Now to our top story, Washington, Beijing easing tensions with a trade truce.
I thought it was an amazing meeting. He's a great leader of a very powerful, very strong country, China. And what can I say? We have, it was an outstanding group of decisions, I think, that was made. A lot of decisions were made, too. There wasn't too much left out there. And we've come to conclusion on many very important points.
President Trump now on his way back to Washington. For more, Bloomberg's chief Washington correspondent Tyler Kendall joins us now from Gyeongju, South Korea. So Tyler, a lot of rhetoric praising this meeting, talking about on a scale from 0 to 10, the meeting was a 12. What were the deliverables?
Yeah, hey, Vani, good morning. It feels like the most tangible impact that we're getting from this meeting is that China will see an immediate reduction to its tariff rate. President Trump saying that he will cut that 20% tariff tied to fentanyl concerns in half. As he says that Chinese President Xi Jinping made some pledges to curb those so-called precursor chemicals that are used to make the drug. Just for context here, China exported about $1 billion worth of goods per day in September. Our analysts at Bloomberg Economics say that number is about to go way up with this tariff reduction. And now, of course, because the holiday season is upon us. So that kind of seems like the main deliverable that we're getting, because the other ones were widely expected, right? Both sides agreeing that China is going to delay its newly unveiled export curbs related to critical and rare earth minerals for at least a year, and that China has pledged to resume its imports of U.S. agricultural products, including soybeans, though we are still waiting for those exact details on just how much and how quickly American farmers are going to see relief. On the U.S. side also, the U.S. is no longer going to impose fees on Chinese ships that are docked at U.S. ports. So a lot of what we're seeing is really just a pullback in the recent escalation of the past few weeks. But Vani, two things for your radar that we did glimpse a little bit into, though perhaps not quite the outcome that we were maybe tracking. One, President Trump saying that he did not discuss NVIDIA's Blackwell chips with the Chinese president, though they did discuss other NVIDIA products, and he said that that conversation is going to be ongoing. And two, the pair of leaders also discussed the war in Ukraine, but it does not appear that China is making any moves, Vani, to curb its imports of Russian energy supplies.
Yeah, Tyler, lots to discuss. And there is an invitation out now to the Chinese president to visit the White House, and President Trump said he would be visiting China. There was some de-escalation apparently elsewhere as well. Trump having a talk while he was there with Mark Carney of Canada.
Right, exactly. And this comes after we heard from President Trump on his way over to Asia say that he was not interested in speaking with the Canadian Prime Minister. Now, at this point, we haven't gotten a readout of that conversation, but we know that Canada has been trying to get these trade talks with the U.S. back on track after President Trump had essentially pulled them off the table and threatened now this additional 10% levy on Canadian goods. As you well know, Canada is already facing a 35% levy for non-USMCA compliant goods, and then really high levies when it comes to those sector-specific tariffs, like 50% on steel and aluminum. This is something that we're watching very closely, of course, as the escalation continues. And then, Vonnie, compare that with our other North American neighbors. Mexico earlier this week actually getting an extension on their trade talks so that they can continue these negotiations. So it's very interesting to compare how the two leaders have been talking to President Trump, but clearly a positive indication that President Trump did say that he had this conversation with the Canadian Prime Minister while here in Asia.
Tyler, thank you so much on that Asian tour all week. That is Tyler Kendall. Back to earnings then. We are also awaiting consumer results from the likes of Hershey, Estee Lauder, and also Kimberly-Clark. They're all before the bell. This as the Kraft Heinz CEO warns of the worst consumer sentiment in decades as the company lowered its sales outlook. For more, joining us now is Bloomberg's Maddie Parker. Let's begin with Hershey and also Estee Lauder, I guess. Maddie, what are we expecting in terms of their comments about the consumer?
Yes, obviously at Estee Lauder, I think all eyes kind of are still on their turnaround efforts. They brought in a new CEO at the start of the year, and big changes have already been made at the brand. We're talking job cuts, but also some shifting priorities in terms of what they're focusing on. They've really got some strong focus on some of their most successful products in skincare and cosmetics, and it'll be interesting to see how consumers react to their decision to actually lower some of their prices and to try and keep up with some of that really fierce competition from some of the smaller labels. It's sort of a similar picture at Hershey in terms of who's calling the shots. They brought in a new CEO earlier this year, and this will be the first set of results under him. Hershey, along with a lot of the other confectionery makers, of course, have faced a lot of rising ingredient costs over the past couple of years, particularly in the form of surging cocoa prices. So what will be interesting there is to see how consumers are responding to their decision to actually hike their prices and to try and kind of make up some of those headwinds, and to see how consumers are kind of reacting, particularly as we approach Halloween and the festive period, which are obviously when some of the chocolate makers get bolstered performances.
Yes, and apparently shipments were a little early this Halloween. Maddie, we have to leave it there, but we'll be watching for Hershey and also Estee Lauder and Kimberly-Clark as well, which has been doing a bit of a strategic tidying up. That is Maddie Parker. Thanks for joining. Coming up, we'll get you set up for your trading day with more earnings and that rate decision by the ECB. This is Bloomberg.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something. Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Tyler Kendall, covering President Trump in Tokyo, and this is Bloomberg.
Didn't really think I had a problem.
I would isolate, self-medicate. Like 48.5 million Americans, they didn't choose addiction. Go to shatterproof.org/findtreatment. Watch the film No More Secrets and find out how you can get help. That's shatterproof.org/findtreatment.
In case you missed it on Bloomberg Tech.
This is why we need to reindustrialize. This is why we need to have our own rare earth supply. This is why we need to be able to make our own chips and our own computers and our own products downstream, because it takes away leverage from China. They do have a lot of leverage right now, and so it's very hard to make deals with them. I think it's actually healthy for the U.S.-China relationship for it to not be so dependent on China.
Don't miss Bloomberg Tech, live every weekday.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Alberta, Canada, and this is Bloomberg.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. Now a look at what's ahead today. Earnings continue. We have Eli Lilly, Hershey, Estée Lauder all reporting before the bell. Then the European Central Bank announces its rate decision at 9:15 Eastern, followed obviously by President Lagarde's press conference at 9:45. And Apple and Amazon report after the market close. In terms of micro movers, Alphabet sales beat estimates, as we know, on Google Cloud unit growth. So we're seeing those shares continue to rise. They rose obviously after market yesterday too. Now investors have been a little bit spooked by Meta's spending. It warned of even bigger spending to support the AI boom, and that's sending those shares lower along with a one-time charge. And Chipotle down 18%. Weaker traffic at Chipotle, and that's weighing on the outlook. I want to point out that Novo Nordisk has now outlined its new offer for Metsera. It'll be $56.50 a share cash, plus more than $26 a share CVR for Metsera. That is it for Bloomberg Brief.
GDP growth in South Africa has really been lackluster for quite a number of years, and largely because the economy has been hamstrung by state-owned entities that have a monopoly on transport, energy, that have not been functioning for a very long time. So one of the things that give us hope, and I think we're able to be constructive with the outlook, is the economic reforms that are taking place in the country. So on energy, I think Eskom has done well to stabilize the days of load shedding, and then the energy factor and reliability factor keeps on improving. It's overdue, probably should have been done about 20 years ago, but those are things that are important to support the medium and long-term growth prospects of the country. So that's encouraging. South Africa is our primary market. We'll have operations outside to make sure that they provide resilience and growth for the portfolio. So it was quite pleasing to be able to grow earnings in South Africa by 13% in an environment where GDP growth is less than 1%. Households are still under pressure. I mean, like the rest of the world, we've seen a high inflationary environment with high interest rates, so that has put pressure on households. But even then, that inflation is starting to come down. Rates have come down. In the long run, that's very good for South Africa.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
The Federal Open Market Committee
decided to lower our policy interest rate by a 1/4 percentage point. A further reduction in the policy rate at the December meeting is not a foregone conclusion.
Which, of course, makes it very difficult for them to begin cutting again in December.
What you see here is a repricing of market pricing to December.
You have a pretty divided committee in terms of the case for preemptive cuts.
Instead of a dual mandate, we have a dueling mandate.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Good morning. Welcome to Bloomberg Surveillance. Bond markets stabilizing after a hawkish rate cut and a Fed chair who's slowing down in the fog.
We continue to face two-sided risks. In the committee's discussions at this meeting, there were strongly differing views about how to proceed in December. A further reduction in the policy rate at the December meeting is not a foregone conclusion. Far from it.
Meanwhile, tech earnings highlighting just how high the bar really is, with Meta futures plunging in response not to bad earnings, but simply to big spending plans. And the big story this morning, President Trump calling the meeting with China's Xi amazing, with a host of market-friendly details. Anne-Marie, definitely catching the attention of a lot of people in markets.
Right, he came out and told reporters, at a scale of 1 to 10, the meeting was a 12. It was just simply his words, amazing. So investors can breathe a sigh of relief. Look, soybeans are going to be purchased, rare earths are going to start flowing again, the fentanyl tariff is going to be cut. But two issues that I think still need to be dealt with. One, the president said there's going to be an energy deal. We're going to be speaking to Secretary Chris Wright. Potentially he can give us some insight into, is China going to be purchasing U.S. energy? And then what happened with the Blackwell chips? The president said Blackwell will be discussed. The president said other chips were discussed, but not Blackwell. And then he said China will be discussing this specifically with NVIDIA. And I think this is where the market will want some clarity.
Absolutely, given the fact that there's been a lot of questions about how much that is on the bucket list for China's Xi Jinping. In the meantime, we did get a Fed chair press conference yesterday, and it seemed like, not that he was passing the buck, but saying, hey, government, open up, give us some clarity so we can get out of the fog, and maybe we can act more quickly. Otherwise, we're slowing down.
Absolutely. But to his credit, how can he say we are in a position to cut interest rates in December when they might still be in a data desert, and he is dealing with diverging views on his own Federal Reserve? I love what Zero Hedge tweeted yesterday. Wait, did market expect Powell to say we'll definitely cut in December? Because that's what it felt like going into this meeting. 90% chance the market had for a December rate cut. They got a little bit of dose of reality yesterday.
Yeah, the answer to that is yes. That's what they were expecting, and that's what they're hoping for. And there's a real question of what the benchmark is right now for the Fed. Is it the labor market or is it inflation? Right now in markets, you're seeing a pause, a stability in bond markets and stock markets, a bit of softness pretty much across the board, but just a bit, down 0.2% on the S&P. You are seeing a little bit of a dollar weakness after yesterday's strength. Euro 116.19. 10-year yields having a little bit of a break after rising by 10 basis points yesterday in the wake of that Fed meeting. 4.06%. Coming up this hour, Chris Verone of Strategas, with stocks holding steady at record highs. Leland Miller of China Beige Book as the U.S. and China reach a deal, and Krishna Guha of Evercore with a December rate cut in question. We begin this hour with stocks just dipping just a slight bit despite the U.S. trade deal with China, a rate cut, and a trio of big tech earnings that really are not bad, despite what you might be seeing in some of the shares. Chris Verone of Strategas, a Baird company, writing this: the market seems more tolerant of rate cuts here. So long as 10-year yields are below, say, 4.20 or so, the path of least resistance remains lower for rates. Chris joins us now. Chris, thank you so much for being here.
Thank you.
What did we learn yesterday?
Listen, I think what was the language? Far from it was the language that Powell used. It reminded me a little bit of 2018, nowhere near neutral. He has a reputation of being late. I think the bond market knows that. We've seen that with the 2-year yield over the last 5, 6, 7 months. The fact that the market rate still trades, even after yesterday's bounce, call it 75 bips below where the policy rate is, I think is a suggestion that the market wants more. And I think the market wants to be placated here in the December meeting and beyond.
The market always wants to be placated. I think that is an evergreen statement. There is a real question of which market. There are many different markets. The momentum market was the one that really took it on the chin yesterday in response to the disappointment about not getting certainty about a December meeting. Do you think that that has longer legs than just the momentum trade?
Well, I would say first, I would say the most important market here is probably the bond market. And when you think about what the reaction was yesterday of bidding up short end rates higher,
I think that was a bit of a mistake. If we get to a point where they don't go in December, I actually think rates fall, right? If this is an economy that's cooling, that's weakening, and they don't cut into that, I think the risk is actually yields fall from here and fall more meaningfully than people expect, and not for the right reason. When you look at the curve's quietly been flattening for the better part of the last 2 months. I don't think the banks have loved that. You've seen that with the regional banks. So certainly there's some hints of weakness there. When you look at the broader momentum trade, I thought last week's hit to gold was particularly relevant in that regard. I think the question out there is, does that begin to bleed into what has really been the main show, the momentum in Mag 7, in tech? I think it's early to make that conclusion.
Especially because earnings came in pretty well, right? I mean, if you think about it, when you start talking about $77 billion of revenue for the likes of Meta, and then you start talking about Crimea River, take out your violin and say, well, you're spending more than you're bringing in terms of the expansion. How much are you seeing that skepticism that gives you a sense that this can keep going for longer than many people think?
Listen, I think when enthusiasm is heightened, when there's animal spirits out there, as a market observer, you have to be particularly on top of the levels. And basically go through Mag 7 through Mag 7 stock. All of them are above the levels that I would need to stay constructive on all of them. We'll see where Meta opens this morning. Is probably the one of the 7 in a bit more of a tenuous spot. It actually did correct pretty sharply over the course of the summer. But when you look across the board, I mean, NVIDIA new high, Broadcom new high, Google new high, Apple first 52-week high in 18 months. So the balance of them, I still think are in pretty good shape here. What happened to gold, I think, was idiosyncratic. All the bells and whistles of a blow-off were playing out in the gold market over the last several weeks. I don't think we've seen that same type of euphoria in equities yet.
When it comes to the Fed, though, isn't Powell correct when he says, how am I supposed to guide and how are we supposed to say there's a December cut when we have a government shutdown? And at the moment, no side is blinking. I mean, we could be December without zero data.
I think there is such a lack of a healthy respect for what the message of the market is coming from the Fed. I would say, underweight the data, overweight what we're seeing both from the bond market and from leadership. The fact that discretionary remains pretty tepid here, the fact that banks have started to weaken here some, I think is the market saying you better go data or no data.
Do you think the market will push him in December?
I think if we get to the point, so we're at Fed Fund futures right now, about a 60% chance that they go. I think if we start to get to a point through Fed speak over the next couple of weeks where it looks like they don't, the market will push them.
Right now, we're looking also at a bunch of certainty as well. I mean, look, we're going to get to the weakness in just a second, and I do want to get to that because the Chipotles of the world really are raising some red flags about the other consumer out there. I am curious about your take, though, on the China-U.S. deal that was announced. Granted, very few details that actually can be solidified in any kind of inked deal, and nonetheless, providing some kind of framework, bringing down the temperature, talking about the potential that we're not going to get some of the levies on trade, on shipping, et cetera. Does that give you more confidence, or is that just lip service at this point?
Yeah, it does. And I mean, when you think about, I don't think neither Xi nor Trump were really in a position to escalate from here. Go back, what was it, 2 weeks ago now, when Trump sent the tweet that sent markets down 2.5%, 3%. Maybe a little trial balloon there of what a bad deal might look like. But I thought what was interesting that day and beyond, what didn't move that day when stocks were down? CNH was remarkably calm. That's been our barometer into China risk. Dollar CNH has stayed stable the entire time. That's our look at macro risk. When I look at domestic risk, high yield CDX is still really calm here. I think as long as spreads are below, say, 350, the concerns about some developing credit problem here, or through the lens of CNH, some macro problem, are probably overblown.
So I'm trying to gauge whether you're bullish or bearish right now, and it sounds like you're not exactly screamingly bullish on pretty much anything just because of valuations, but you're not yet ready to be full-on bearish. Is that an accurate characterization?
I'm a trend follower, so the trend is up. We've been bullish, we stay bullish, but I just want to be a little bit mindful here. We're in a bit of a window where it seems like the bond market wants something, and I think when you look at what's been a little underwhelming performance from both the banks and discretionary over the last 4, 5, 6 weeks, you do begin to wonder if some of the ground underneath us is starting to shift ahead of 26. I think it's early to abandon any bullish call. The two things I would watch, again, if there's macro risk, it will be expressed through CNH weaker. That has not happened yet. And I think if there's domestic credit risk, it will be expressed through high yield CDX wider. That has not happened yet either.
We look at the bond market and concern for the deficit. There's a chance Supreme Court is going to strike down IEPA. $90 billion worth minimum is going to have to be refunded to companies. How does the market react to that?
I still would be surprised, not necessarily with the strike down, but with the refund call. I think at the margin, one of the reasons that the U.S. bond market has frankly been the envy of the world this year, when you look at what U.S. rates have done relative to Germany or to France, is because of the tariffs.
That's why I'm asking. What if you can't enact the tariffs?
Like, at the end of the day, everywhere across the curve is in a downtrend, whether it's 2s, 10s, or 30s. I think, as we wrote this week, as long as you're keeping U.S. 10s below 420, 425, as long as you're keeping U.S. 30s below, call it 480, 490, the trend is lower.
Chris Ferrone, always wonderful to have you. Thank you so much for being here. Chris Ferrone of Strategas here in studio. If you do want an anecdote, and there are plenty of them, Chipotle is the one that comes to mind. Yes, it is Meta. Yes, we're talking about getting Amazon and Apple after the bell. But Chipotle coming out and saying, earlier this year, as consumer sentiment declined sharply, we saw a broad-based pullback in frequency across all income cohorts, then talked about the ongoing stress in income levels below $100,000. There is a question here about whether this is an idiosyncrasy or whether this really is a trend that's going to deepen into 2026.
They're seeing a consumer slowdown, which is affecting them, but they're also talking about they're seeing higher beef prices, which the president has been tweeting about. We have seen massive uptick in beef prices. It's been a huge issue for consumers. And then at the same time, Chipotle is talking about the impact of new tariffs that are hitting their bottom line. So they are in a very difficult spot right now as compared to other individuals on the high-end consumer level.
Yeah, and the profit margins have been shrinking. The shares responding in response. Right now, let's get you an update on stories elsewhere this morning. Here is your Bloomberg Brief with Vonnie Quinn. Vonnie.
Good morning, Lisa. Well, just to flesh out what you've all been talking about, President Donald Trump saying he had a, quote, amazing meeting with Chinese President Xi Jinping that resulted in a trade deal to have fentanyl-related tariffs on Chinese goods effective immediately. Trump also said China had agreed to buy U.S. soybeans again. On a scale of 1 to 10, the president said he'd rate the meeting a 12. One issue that didn't come up in President Trump's meeting with Xi Jinping was NVIDIA's Blackwell chip. The president had indicated he might discuss giving China access to the chip giant's most advanced semiconductor. Trump said it's up to Beijing to continue talking to NVIDIA about access to that chip. Shares of Alphabet rallying in the pre-market. The company reported third-quarter sales that topped Wall Street estimates, fueled by a surge in demand for its cloud and AI services. Alphabet said it's investing record amounts to try to push progress in AI. And that is your Bloomberg Brief. Lisa.
Thank you so much, Vonnie. Up next, U.S. and China strike a trade deal.
I thought it was an amazing meeting. He's a great leader of a very powerful, very strong country, China. We've come to conclusion on many very important points.
China Beige Book CEO Leland Miller joining us next. This is Bloomberg Surveillance. Good morning.
Day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
In case you missed it, on Bloomberg Brief.
This is a big difference from April. Remember when there was no place to hide? And now, even though the 10-year is below 4%, if you start to see the labor market showing signs of firing, whether government or the private sector, I think then the 10-year has a lot of room to decline, because then the Fed's cutting into accommodative territory, not just getting to neutral.
Don't miss Bloomberg Brief, live every weekday.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Bang up earnings from a number of the tech companies were not enough. Right now we're seeing futures just slightly softer ahead of the open, although clawing back from some of the earlier lows, down to just about less than 0.2% on the S&P. I'm watching the 10-year yield after that 10 basis point surge yesterday on the heels of the Fed meeting. You are seeing a bit of a reprieve, just dipping a slight bit, finding stability here in and around 4.07%. Meanwhile, a big question about Apple and Amazon after the bell, as well as what we're going to see from ongoing bond market stimulus. A question, though, about trade. Under surveillance this morning, U.S. and China strike a trade deal.
I thought it was an amazing meeting. He's a great leader of a very powerful, very strong country, China. And what can I say? We have, it was an outstanding group of decisions, I think, that was made, and we've come to conclusion on many very important points.
Here's the latest. The world's two largest economies reaching a trade deal. The U.S. trimming fentanyl-related tariffs and China pausing rare earth export curbs for about a year. Bloomberg's Tyler Kendall joins us now in Korea, where she has not been sleeping and doing a tour of Asia. Tyler, what stands out from you from this particular meeting?
Yeah, hey, Lisa, good morning. Well, it really does feel like that reduction in tariffs for China is the most immediate and tangible impact. President Trump saying that he will cut that 20% tariff linked to fentanyl in half over China's pledges to curb the so-called precursor chemicals used to make the drug. Just for context here, Chinese exports to the U.S. last month averaged about $1 billion a day, and analysts say that number is now expected to go up significantly amid this reduction in tariffs, and also that the holiday season is upon us in the next couple of months, because really at this point the other deliverables that we saw were widely expected or telegraphed beforehand. We got that confirmation that China is going to delay at least a year those newly unveiled export curbs related to critical and rare earth minerals, and also resume the purchases of U.S. agricultural products, including soybeans, though at this point it's unclear how quickly American farmers will see that relief. Also importantly, the U.S. side does confirm it's no longer going to impose fees on Chinese ships that are docked on American ports. That, of course, was a key concession that Beijing wanted to see. Now, two other things that we were closely tracking that I'll touch on quickly. You mentioned this at the top of the program. President Trump saying that he did not discuss China's NVIDIA's Blackwell chips with the Chinese president, though they did discuss other NVIDIA products. That's something we're going to have to track in the months ahead. And then second, the two leaders did discuss ending the war in Ukraine, though at this point it does not seem like China is any closer to curbing its imports of Russian energy supplies. Lisa, we did get a readout from China's side. It was sparse on details, but did strike this positive tone, saying that there needs to be this cooperation going forward. As for now, these tensions are eased, and both sides seem to be trying to inch closer to signing some sort of broader trade deal down the line.
Tyler Kendall, Bloomberg's Tyler Kendall, thank you so much for all of your work and for that report. Right now, Leland Miller of China Beige Book writing this. The U.S. has, in fact, offered deeper concessions to secure this truce. Once those details emerge, this deal will look far more one-sided in China's favor and perhaps also less likely to hold. Leland joins us now. Leland, why do you say that? What concessions do you see the U.S. offering China to secure this deal that seem lopsided?
Well, I think this is the beginning of the deal, not the end of the deal. So I think what we saw in the last 12 hours was a successful start. The president agreed to pull back tariffs in return for the Chinese agreeing to pull back rare earth, their new rare earth export control regime. People may not be happy with a lot of people may not be happy with the shipping fees being postponed, but in general, the low-hanging fruit was addressed. What you didn't see was something that I think a lot of China hawks were scared that they would wake up to, which is a whole bunch of export controls pulled back and some sort of quid pro quo. But again, President Trump announced that he is heading to China early next year, and there will be more concessions, and there will be more back and forth, and there'll be a broader deal that they're working on right now. So we're working on the margins of the deal, and as we get closer to the core, I think that's when things are going to get a bit more controversial.
Leland, what about AI chips? Because the president had said that they would discuss Blackwell. Then he said they didn't discuss Blackwell, but they discussed other chips, and it's now for China to talk about that with NVIDIA. Where does this stand?
I think what the president came to understand over the last 24 hours or so is that this is by far the most controversial aspect of any trade deal. When you start incorporating export control rollbacks, which are done for national security purposes, as part of a trade deal where you're just trying to get China to buy more commodities, this becomes very, very problematic. And so I think what the president realized is that his team needed to do a little bit more research on what made sense here. Obviously, that there's this is a very big issue. But if the president is trying to build up a broader deal, these were the low-hanging branches. And then I think as they work towards the technology side, that's when things are going to get more controversial.
What about TikTok as well? We heard there was going to be some sort of deal regarding TikTok, and all that we heard from the Chinese Commerce Ministry is that they will keep talking.
Yeah, I think there's a general sense that the Chinese side is not completely against any TikTok deal, but I think that they're holding their cards as close to the chest for as long as possible, and so they can get the maximum concessions possible. Keep in mind, if we would have just announced every concession right now, and then President Trump announced a trip to China in April, there'd be this whole scramble to try to understand what that's for. So I think some of the things that people were talking about being released right now are actually being pushed back a number of months. And I think both sides are trying to see what the other side's willing to give before they have a final framework.
So it's a détente for about a year, but that doesn't mean this relationship cannot escalate with any sort of truth that comes out of the White House. What would your message be to investors that think potentially they can ignore this relationship for the next 12 months?
Well, I think, look, an agreement to not do something for a year only holds as long as the Chinese decide they're not going to do something. They don't feel like they've been provoked or something else. So there's an issue that a one-year truce doesn't mean a one-year truce. It means a truce until one of the sides decides that truce doesn't work anymore. But the larger point is, I think, on tariffs. The president's moved back tariffs by 10%. So you have a headline rate of 57%. That sounds going down to 47 or so. That sounds high. You've got an effective rate of around 30%. So I think the larger picture here is they have gone down enough that they're getting very close to what competitor producers are actually being charged in the 20s. Vietnam and the Mexicos and other Southeast Asian countries. If they get too close, all the de-risking work that the president has done will start going the other direction. There will not be an incentive to move your supply chains out of China. So they're going to have to look at that very closely. They're about at the end of what they could do in terms of tariff reductions on China without reversing the president's tariff regime that he fought very hard to put in place.
Leland, the optics of this trip have been pretty powerful. The idea of a Southeast Asia tour in Malaysia and inking some of the deals and the niceties between the likes of the Thai and the Vietnamese and the other leaders in the region, Japan as well. What do you make of that? Do you think that that does give the U.S. closer allies in Southeast Asia that gave it more clout, more ammunition heading into these meetings with China?
Certainly, the more the United States interacts with its allies and partners in Asia, the more leverage it'll have with China, and the smarter policy will be, because you'll be able to de-risk your supply chains outside of things that give China leverage points on your economy. So it's good politics, it's good economics. I think it's very helpful. You look at what happened with the critical minerals. The Chinese released a very powerful export control regime that exerted dominance over the supply chains of the world in terms of rare earths and critical minerals. The U.S. has immediately responded and tried to go out and have partnerships with Australia, with Southeast Asian countries. So I think that what China did was quite momentous, but at the same time, it has lit a fire under the United States to try to do something to fix the problem.
Leland, one thing that China Beige Book does so well is you track real-time economic activity going on in China. There's been a stagnation that we've talked about, unemployment rate for youth very high, and a real question about how much the economic backdrop is going to push Xi Jinping to the table to try to make sure that the relationship with the United States and frankly the rest of the world isn't severed. How well are they doing at rebalancing their economy into more of a consumption, less of just simply an output-based economic model?
Well, the contours of your question are really important because if you were asking how their economic performance is doing, I would say it's doing well enough for Xi. It's doing well enough. And so I don't think that they feel any pressure to come to the table with the United States. But if your question is, have they been, creating this wave of, this shift from investment to consumption, which they've been promising the last 10 years? No, there's absolutely no sign of that whatsoever. And I don't think you will see that. What you've seen out of the Chinese government is sort of resistance to this. It's been, we got to produce more. We have to export more. We have to continue to use manufacturing and industry as our growth driver. That is running into a buzzsaw, which is global trade friction. So, the Chinese have talked a lot about consumption. They've done very little on consumption. So I think that's something to watch in the future. But, rather than listen to what they say, I would urge everyone to watch what they do. And I think that's going to be very important because if they do not create the mechanisms to spur up more domestic demand in China, then these trade frictions will never go away. It's not a Trump thing. It's a China thing.
Leland Miller of China Beige Book with some real speak this morning. Really appreciate your time, Leland. Always learn from your insights. And this really does speak to what we're seeing in places like Germany, where economic activity stagnated. And this question of just how many people will coalesce behind this push to get China to shift its model a little bit, to not rely so much on exports.
Well, Europe's waking up to this because it's not just the exports, it's the investment of the likes of BYD coming with factories and hollowing out their own industrial base. But it is pretty incredible. And this is the issue the Trump administration has. China's exports have held up even in the face of high U.S. tariffs because they're just dumping on other markets.
Yeah, meanwhile, we're going to shift to the tech sphere, which is also really key to China. Coming up, Stefan Slowinski of BNP Paribas Exane. As big tech's big spending on AI tests investor patience, plus you hire on it with your morning movers. Chipotle plunging on another sales forecast cut. This is Bloomberg.
Rodriguez. And I'm Jason Kelly. And we're back with another season of The Deal, with athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones.
Some good-looking trophies. 1-1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzone.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're the 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
in case you missed it on the opening trade.
Kit, I've got a present for you. I know you've mentioned it a couple of times. We've got a coffee for you.
Hang on a sec.
By the
Coffee
lovely Tara.
coming. There we go. So my question now is, how much froth is in there?
See, you can't tell when you look at the top. That's the You've got to drink it to find out.
Absolute genius. You got to take the lid off before you even figure out what's going on.
Don't miss the opening trade, live every weekday. Trying to digest a fire hose of news over the past 12 hours, let alone 24 hours. Right now, futures taking it all in stride, as they tend to do, just down a touch after getting tech earnings, after a disappointment, evidently, from a Fed that is unwilling to commit to a December rate cut at this point, and after what we are hearing with respect to a China-U.S. deal, the contours of which remain a little bit fuzzy in terms of what has to be inked. Right now, you're seeing futures down about 0.2% for the S&P, less than the NASDAQ 100, down just about 0.1%. And the Russell getting a bit of a pop after yesterday, really digesting some of what we heard out of the Fed. Meanwhile, in the bond space, a little bit of quiet after a pretty roaring response to yesterday's Fed meeting and the press conference, where it did seem like this Fed really wanted to push away from the idea of a December rate cut. You are seeing 10-year yields quiet now at 4.067% after yesterday surging by 10 basis points across the board. Even 2-year yields now 3.59%. And gold, let's take a look at gold, because since October 20th, you have seen a 10% plunge in the precious metal. A lot of questions about whether this is actually a tell on some type of geopolitical calm or some kind of trade, but nonetheless, you are seeing stability there too, up about 1.5% this morning. 3 hours away from the cash open, here are your morning movers with Yahira Anand. Yahira.
Hi, Lisa. It was a blowout quarter for Alphabet. Shares are up 7.7%. The Google parent posted beats across the board, with revenue topping $100 billion for the first time, and net income up 33% from the same time a year earlier. All this thanks to surging demand for its cloud and AI services, giving investors confidence that the massive spending it's doing on AI is paying off. But that same confidence did not extend to the likes of Meta and Microsoft. That's why those shares are lower. Microsoft saying that cloud growth is still bumping up against capacity limits, while its beats failed to live up to investors' expectations amid its high valuation. As for Meta, CEO Mark Zuckerberg came on super strong about ramping up AI spending, and that was enough to spook investors after it delivered just an in-line revenue guidance for the current quarter. And we end on Chipotle. Those shares are plunging nearly 20% now in the pre-market after it cut its outlook for the third time this year. They say that diners are pulling back, especially those with lower incomes, so they're going to take a very cautious approach when it comes to any price hikes. It's the latest sign of consumer strain, with the Kraft Heinz CEO saying yesterday that this is the worst consumer sentiment they've seen in decades. Lisa?
Thank you so much, Yahira. You know, the Chipotle, the Kraft Heinz, to me, that is a story that you have to dig your teeth into and understand, is this a Chipotle problem, or is this a broader consumer market problem? And ultimately, that's what the Fed's parsing through, and that's what a lot of investors are too.
It feels like when it comes to these restaurants, though, they're willing to accept the higher input cost. Neil Dutter wrote in, he goes, Amory, they're eating the beef prices you just pointed out, which is true. Cheesecake Factory, Chipotle, Starbucks, every single one of them on some point of these earnings is talking about the fact that they are not pushing on price because they do not want to sacrifice what's going on with the consumer.
Happy Funny Morning, Neil. Thank you so much for that. On our radar this morning, U.S. President Donald Trump and Chinese President Xi Jinping finalizing a truce expected to include tariff relief on Chinese goods for 1 year and a reduction in U.S. duties linked to fentanyl. Elsewhere, Fed Chair Jay Powell warning a December rate cut is far from a foregone conclusion. For the first time in 6 years, the FOMC faced dissent in both directions as differing outlooks on inflation and jobs fuel a tug of war among policymakers. And OpenAI reportedly preparing for an initial public offering as soon as next year. According to the Reuters, the company could target a market capitalization of $1 trillion. Well, this would be one of the largest ever IPOs. An OpenAI spokesperson stated that it's currently not our focus. And Amory, it just highlights how big this company has gotten as a private company and how levered the entire tech space is in some ways to the OpenAI story.
On the low end, they're talking about maybe, according to this Reuters report, $60 billion to raise. That in itself would be tremendous, but potentially this could be worth $1 trillion. Interesting, the Reuters report talks about the fact that they want to tap the IPO because it would open the door to more efficient capital raising, enable larger acquisitions using public stock, helping to finance Altman's plans to pour trillions of dollars into AI infrastructure. So guess what? More money going into AI. Very much so. If you're one of those individuals talking about the fact that maybe it's starting to feel like a bubble, maybe it's just not yet. Maybe this will be the top.
Well, the question here is, first of all, OpenAI is worth $500 billion, according to the last private market estimate.
Remember when they were
Yes, startup. I remember that. So then there's this question of, okay, can they reach $1 trillion? Then there's a question of what the appetite is for investors who are getting really tired of some sort of investment plan without a commensurate expansion in profits. And that's what we saw yesterday with Meta. That's what we saw on the margins. A little bit with Microsoft, but that was really just a very high bar. But it seems like people are looking for bubbles, which means that maybe they're getting a little more cautious.
This stat stood out for me. Meta, along with the fellow Mag 7 peers, Google and Microsoft, racked up $78 billion in capital expenditures last quarter. That is basically a 90% increase from a year earlier. That is a crazy amount of CapEx that you advanced just 1 year alone.
So let's build on that $78 billion in combined spending from Meta, Alphabet, and Microsoft. That is just in the third quarter, and the tech giants putting most of the cash toward data centers and chips. Stefan Slowinski covers those names for BNP Paribas Exane and joins us now. Stefan, what did you learn, not necessarily from the earnings yesterday, but from the reaction in markets?
Yeah, good morning, Lisa, and thanks for having me on. So the markets seem to not be able to make up their minds one quarter to the next. Last quarter, we had very strong top-line numbers from Meta and Microsoft, and the stocks were both up very strongly, despite signaling increasing spend. This quarter, we again had very strong top-line results from both of those companies, and obviously those stocks trading down today. So the market's getting a little bit more spooked on some of the spending intentions, especially for Meta. I think the big difference here is with Meta, you have margins, operating margins down around 300 basis points year over year. For Microsoft and for Google, margins are up 200 basis points. So those two companies are being much more disciplined around spending. Arguably, they're much more advanced in their AI partnerships and strategies. And people are starting to get a bit more nervous on Meta with some of the spending that they're seeing.
Stefan, Gene Munster of Deepwater Asset Management wrote this in response to Meta's earnings. Expenses are growing faster than revenue driven by third-party cloud. The last 2 years, it's been the flip story, and this is what he thinks is spooking the market. I'm just wondering, Stefan, what Meta's investing in and whether it could be worthy, similar to what we have seen in previous years from the giant that has changed its name, invested in all sorts of new ideas that haven't come to fruition but still have pulled out pretty impressive numbers and returns.
Yeah, I think when you look at Meta and you look at the track record, certainly what Mr. Zuckerberg is arguing is trust us. You know, we've delivered in the past. Maybe we've been late to some technologies like core AI and now Gen AI, but in the end, we get there. And so stick with us. But the stock's up 680% from the 2020 lows, so investors have done quite well. Like I said, on the spending and discipline investment side, Amazon, Microsoft, and Google are giving you margin expansion and very healthy earnings growth going forward, whereas with Meta, that's likely to slow significantly. And I guess finally on AI, we've seen with Meta this new superintelligence lab that has been sort of cobbled together over the last couple of months. And so there is execution risk there. It's not like what we're seeing at OpenAI. It's not like what we're seeing at Google, where you have a long-established team that's been delivering models and delivering products and launches consistently. With Meta, it is a bit of a rebuild, and so there is execution risk on that Gen AI front.
I was struck by the employee compensation costs. It's now the second largest contributor to the increase in costs that Meta has for next year. Do you think they're going to start to put pause on these million-dollar contracts they're going out to with AI data scientists?
Well, we're definitely seeing those quite expensive hires, but as Meta likes to say, it's a very dense talent pool. So it's not the sort of tens of thousands of hires that we saw from Meta and from big tech back in 2021 post the COVID boom. I think as well, what we're also starting to see is that CapEx hitting the income statement through depreciation. So at BNP Paribas, we've written a lot about this over the last few months, which is that ramping CapEx finally coming through and hitting margins. And so we're seeing that coming through and hitting operating margins. Google talked about a 41% increase in depreciation in the quarter and how that's going to accelerate. But again, you're seeing Google, Microsoft, and Amazon be much more aggressive about managing that, finding savings elsewhere in order to preserve margins or even lift margins and give investors that earnings growth that they want as they wait for that AI revenue to come through.
Does this feel like the third quarter of 2022 where you saw a huge drop in net income and costs rising for Meta, but then the stock ended up going on a tear following that quarter?
I think today you're starting to get a bit of a hint of a worry of going back to the early days of the metaverse, where it feels like Meta is continuing today to invest in the metaverse, where they still very much believe in the opportunity, and they're seeing ramping adoption of goggles and glasses, and they continue to invest there. We see them continuing to invest in core AI, where they're seeing today improvements in their impressions and pricing and user growth because of core AI investments that are working, and now ramping investments in Gen AI, which they see as potentially driving future growth. So I think the market's starting to get a little bit worried, as it did back in 2021, 2022, that the spending is, I wouldn't say out of control, but certainly prioritized spending over margin and earnings after a very good period of growth and margin expansion. But we're set to maybe enter a period where margins come down and earnings growth slows down into the single digits.
Stefan, I'm just looking and thinking probably Google CEO and Microsoft CEO and CFO and the whole C-suite is saying, really, Meta's going to take the oxygen out of the air, which we just delivered this incredible quarter, and people are talking extensively about how much Meta is spending. When you take a look at the bottom line of these huge cloud providers, haven't we learned that there still is demand far outpacing supply, and that there still is plenty of money willing to be plunged into the AI hopes and dreams that so many companies still believe in?
Yeah, absolutely. I think there's two things to highlight. One is the core businesses for all these companies continue to perform extremely well. Meta, 24% growth on a $200 billion revenue base. Microsoft is growing 17% on a $300 billion base. And Google just hit a $400 billion base, growing at 15%. And the metrics across the businesses are quite strong. So the core businesses, before we even get into a lot of the AI drivers, are performing very well. And secondly, to your point, on the enterprise cloud computing side, we are seeing Microsoft and Google sold out, not having enough capacity to meet demand. That's where it's a little bit different for Meta, who doesn't have that enterprise cloud computing business. So all of their spend, all of their investment, all of their CapEx needs to drive a return through advertising. Again, they're doing so with core AI, and that's working well. They now need to prove that they can do that with Gen AI. And importantly, they need to prove that they can deliver a leading frontier model that they can plug into Meta AI and some of their other AI services. If not, they're going to end up being reliant on Google or OpenAI or some other partner who is in the lead on the foundational model front.
Stefan Slowinski of BNP Paribas Exane, thank you so much for being with us. Right now, let's get you an update on stories elsewhere this morning. Here is your Bloomberg Brief with Vonnie Quinn. Vonnie.
Lisa, thank you. The Bank of Japan left its benchmark interest rate unchanged at 0.5%. Two board members dissented against the decision. The yen weakened after the decision, even after Governor Ueda gave subtle clues that a hike could be coming later this year. Shell posted third-quarter profit that beat analyst estimates. The oil giant's performance was led by a rebound in its oil and gas trading unit, even as weaker energy prices weighed on earnings. The company maintained its quarterly share buybacks, marking the 16th consecutive quarter of at least $3 billion in buybacks. JP Morgan has been joined by about 20 lenders, including Bank of America, Citigroup, and Morgan Stanley, in a $20 billion debt financing backing the buyout of video game maker Electronic Arts. Each bank was allocated between 1% and 5% of the financing and will share roughly $500 million in fees tied to the deal. And that is your Bloomberg Brief. Lisa.
Thank you so much, Vonnie. Putting the leverage back in LBO. Up next, Powell's grip on the Fed.
Schmidt, where was he last meeting? Now you've had more evidence that the labor market is feeling a bit spongier and inflation's not as much of a threat as we thought back in September, and suddenly he reemerges. To me, it tells me that Powell is losing his grip on the Fed.
Krishna Guha of Evercore joining us next. This is Bloomberg Surveillance.
crises, two essential crises, and for both it's now or never: democracy and climate, and they are absolutely interlinked. And we have to solve them together. We're losing the democratic infrastructure and norms to deal with the climate, and we're losing the climate stability that is essential for a democracy. We have to solve them together. We've never faced a threat like this to our democracy at a time when it's a perfect storm, at a time when we're being told by climate scientists, some of you may be in this room, that we have to cut our emissions, fossil fuel emissions, in half in 5 years now. You know, when I started to realize what was happening, it was 12 years, and we haven't done it.
In case you missed it, on Bloomberg Tech Europe.
Well, I would argue that our odds are pretty good at winning a big market share. But of course, some incumbents will manage to reinvent themselves, right? I think Jamie is on to something really exciting. He's trying to do it now. You know, Solomon was trying with Goldman Sachs, but then kind of Marcus, you know, was thrown out when the fintech valuations dropped down. A lot of banks stopped their aspirations in fintech, and now they're waking up to that fintech never died.
Don't miss Bloomberg Tech Europe every month.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ. Mondays on Bloomberg.
It's been a huge couple of hours, 12 hours indeed, when we're looking at not only a Fed rate decision that really did leave the market disappointed, but also big earnings from big tech, as well as a deal with Xi Jinping and President Donald Trump. What you're seeing in markets is stability, because why not? S&P futures almost flat at this point after being down as much as 0.2% earlier. You're seeing a little bit of dollar weakness versus the euro, and 10-year yields again finding stability, but just 4.07% after rising by 10 basis points yesterday in just one day. Under surveillance this morning, Powell's grip on the Fed.
I think Myron could have gone for 75 basis points. After all, he wanted 50 last time. And Schmidt, where was he last meeting? Where was he last meeting? Now you've had more evidence that the labor market is feeling a bit spongier, and inflation's not as much of a threat as we thought back in September, and suddenly he reemerges. To me, it tells me that Powell is losing his grip on the Fed.
Here's the latest. Fed Chair Powell saying investors need to lower expectations for a December interest rate cut, underscoring hardening divisions among policymakers. Krishna Guha of Evercore ISI joins us now. Krishna, wonderful to have you on the show. Thank you so much for being here. Let's just start with what Bob Michael was talking about. Do you think that this is evidence that Fed Chair Jay Powell has lost his grip over the Fed, and that any message is incoherent, incohesive, and not reliable heading into the end of the year?
So I think lost control, lost grip is probably overstating it a bit. But for sure, there are strong signs here that Powell is struggling to manage the committee and finding a strong pushback from a large and vocal hawkish bloc within the committee that really pushed him into signaling that December, to use his phrase, is far from a foregone conclusion. This is now down to committee management. There is no sign to me at all that Powell's own position has changed on labor, on inflation, on policy restraint, on policy strategy. But there is stronger pushback within the committee than we thought. And so this is all about now how he manages this going forward into December.
Krishna, it seems like it's no longer a data-dependent Fed because they have no data. And that seems like what Fed Chair Jay Powell is saying. If you're not going to give us official data, we're going to slow down. We're going to take a pause because guess what? It is foggy out there and risks are on both sides. Is this essentially saying to the government, until you reopen and give us some data, we're not going to do anything?
So I don't really think it's a message to the government. Powell doesn't play games like that. And in any case, the Fed saying, please end the shutdown is not likely to be one of the main drivers of how the shutdown dynamics play out. But you're absolutely right. To zero in on this, very striking and in my mind quite curious idea that if we don't get a lot of new information because of the shutdown, then we should go slow. I think that's analytically completely wrong. I think if you have a baseline view as to how the economy and policy is likely to evolve, aka the September SEP, then if you don't get new information, you should continue along the path that you previously assessed. That's the right way to make policy. I find Powell's idea a little curious, and it seems to me another sign of him straining somewhat awkwardly to accommodate this large hawkish bloc within the committee that was clearly flexing its muscles this week.
From your perspective, Krishna, what should be the more important side of the mandate right now? The employment side or the inflation side? Is it the Chipotle side of the world where we're seeing real pushback from consumers? Or is it the Google side of the world where people can't seem to spend enough money?
Well, there's two very interesting but distinct points there. One is speaking to this K-shaped economy that we've talked a lot about, double K-shaped, K-shaped inactivity between the secular AI themes and the others. K-shaped in the consumer between the high-end consumer with the net worth gains and the low-end consumer with slowing labor real income growth. As Powell said in the press conference yesterday, the AI piece doesn't seem particularly interest rate sensitive. That's a secular story, whether you think it's overdone or underdone. So I don't think that he can really try to sort of manage the different parts of the economy. When it comes to balancing the mandate, employment and inflation, I think the reality is that the inflation information, including the September CPI, has been coming in a bit less bad than anticipated. A little reassuring. I'm not saying mission accomplished at all, but a bit on the reassuring side, which logically gives you some more space to lean against the potential for more serious labor weakness to emerge, I think, with another cut in December, which is still my base case, and not by 55-45, more like 2/3, 1/3 coming out of that meeting. But very clearly, that's less of a lock than we thought going in.
Krishna, if they can't guide to December and they say it's far from a foregone conclusion, then why did they bother cutting now?
Well, I think first of all, the market was discounting a cut today, this week, with essential certainty, and it would have been very disruptive not to deliver it. But the logic of continuing to step back towards a more neutral rate setting is as solid in October as it was in September. In fact, it's probably a bit more solid in October because we've had the benefit of that somewhat reassuring September CPI release, while the available data on the labor side has broadly suggested ongoing softness, albeit without any near-term, more serious weakening of the labor market. So whatever the logic for cutting was in September, which is risks coming into better balance, therefore start moving rates back towards a more neutral setting, that applied in October. Logically, if we don't get new information, it will still apply in December. The question is, can Powell drag his colleagues over the line?
Well, Bob Michael, as Lisa stated in earlier on, is saying that he's losing his grip. The Wall Street Journal editorial board calls it Fed confusion, and they think because of this that the president should announce who is going to be his successor sooner. Do you think we could see that the administration speed up this announcement because of the meeting that took place yesterday?
I mean, it's possible that could be an influence at the margin. Certainly, the timeline we've been told to expect is that Bessent will give a shortlist to the president, by Thanksgiving, and then the president, may act on that to make his selection, after Thanksgiving. So that would certainly line up going into December. If they think the Fed's going wobbly on cuts, it might well encourage them to step that up. But I will say that when you look at the impact of bringing Myril onto the committee, you've actually seen that, if anything, the pressures have gone the other way. Right, having somebody who is stridently more dovish than the rest of the committee and whose motivations, fairly or otherwise, are suspected by his colleagues of being somewhat political rather than purely economic in nature. If anything, it's just making the rest of them more hawkish, certainly making them more inclined to stand on their independence. That's not helping Powell actually deliver the cuts. So I'm not sure at all that ramping up political pressure is the way to get the Fed to cut in December, though I do still think that when all is said and done, the logical compromise is what the logical compromise always was, which was absent new information that clearly changes the story and challenges this idea that risks to labor and inflation are coming into better balance. You cut December, and then you take a timeout to assess in early 2026. That was my base case before. It's my base case now, albeit with somewhat less confidence than it was 24 hours ago.
Krishna Guha of Evercore ISI, thank you so much. Always thoughtful, really interesting. And frankly, on the Stephen Myron point, it was really interesting, and this was something that a number of analysts pointed out, that he did dissent with a 50, not a 75, not a 100. I mean, and it sounds outrageous, but if he was dissenting with a 50 last meeting, why didn't he dissent and catch up this time with a 75?
Hopefully we can speak to him and ask him what his thought process was about his changing of numbers. But it is true that Powell is dealing with a diverging Fed. And reporters asked him about this, and he said, no, it's a deliberative body. It's nice to have different voices. But you have to imagine it's hard to deliver that press conference when you have competing factions on your committee.
Yeah, coming up next to break it all down, Stuart Kaiser of Citigroup, U.S. Energy Secretary Chris Wright on the agreement potentially between the U.S. and China, Edward Fishman of Columbia University, and Sonal Desai of Franklin Templeton Fixed Income. This is Bloomberg Surveillance.
Power, money, culture. Haslinda Aman tells the story of Asia's rise through the people who are helping to shape it. On this episode, building a global hospitality empire. How Chef Nobu reinvented the business of fine dining.
The restaurant concept and the hotel concept, for me, the same. I like to make happy to guests. My philosophy is always quality food, quality service, most important, heart.
Encore presentation this weekend, only on Bloomberg.
So today, has value investing been a profitable thing to do over the last 10 years or so, or has it been hard to do?
The market structure has changed, and there has been what I consider it to be a broken market, or the value investing industry, I think, is defeated, so to speak. It used to be that most money was invested by these long-only investors, these big mutual funds and stuff like that. And they had money coming in every day, and they were getting nice fees on all of that money, and they had large research teams. And they would sit around following all of the companies with teams of analysts, and they would say, this company we think is undervalued by 30%. And it might be a growth stock or a value stock, a Magnificent Seven or otherwise, but they would say, I think this is undervalued by 30%, and if I buy it and I hold it, I'll make the S&P plus 30. Now, as we've moved to passive, they've lost their customers, and the remaining customers are paying them lower fees, and they have reduced their research staffs, and they don't have new money coming in to make new investments in any case. And so most of the investing these days is no longer done by people who are buying something because they think it's worth more. They have opinions about price, like what is the price going to be tomorrow? And so the result is most trading that is going on right now has nothing to do with value. So it leaves us sort of as a dinosaur.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories.
The economy has been doing well. That does not tell you what the future is going to be.
We are taking a step-by-step approach, a very systematic approach with India.
This is a time to put a little more defense into your portfolio.
Insight with Haslinda Aman. New 2-hour programming beginning November 3rd. Only on Bloomberg.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question.
Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
I'm David Weston. Join me for the next generation of Wall Street Week. This week, special contributor Larry Summers on the Fed decision and the Trump-Xi meeting. What President Milei's victory in Argentina means for investors and for the United States. And the godfather of AI, Jeffrey Hinton, on why what he helped create could mean the end of us all.
We should be a lot more worried than we are. How are we going to coexist with these things?
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
The
everyone continues to underestimate how big AI can be.
The areas that we are more bullish are really around AI.
Earnings are coming in better.
The positivity is going to continue.
I think what happens is over the next year or so, gravity just reasserts itself.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Good morning. Welcome back to Bloomberg Surveillance, with stocks processing a fire hose of news over the past 24 hours. President Trump calling his meeting with Xi Jinping amazing. Investors digging into the details. Big tech earnings underway with Amazon and Apple reporting after the bell, and a Federal Reserve unwilling to commit to a December rate cut in the fog of uncertainty that is no data and no agreed upon trend. Is this the Chipotle economy, or is this the Google economy?
That's a great question. I think it depends what kind of consumer you are. Chipotle is saying that they are literally going to eat the beef. Higher tariffs on beef, higher costs on beef has been a problem for the administration, higher consumer costs. But it hasn't been a problem for the Magnificent Seven, which continuously spend when it comes to AI. This stat is amazing. Meta, Google, Microsoft. $78 billion in capital expenditures last quarter, 90% increase from where we were last year, which is why everyone is saying, is there some sort of bubble? Because this is a lot very quick.
What was interesting to me is when you take a look at the Fed meeting, it actually was really interesting. It was expected to be pretty much status quo, and yet the idea of pushing back against December rate cut clearly was market moving. I'm surprised the market isn't moving more on the heels of this announcement between Xi Jinping and Donald Trump, the idea that there is some sort of peace between the world's two biggest economies.
I think part of it is the market went into both the events having the base case scenario. We got the base case scenario out of Xi Jinping and Donald Trump when it comes to soybeans, rare earths, and the tariff level. Pretty much we have a detente for a year's time. With the Fed, Jay Powell and the Fed sprinkled some juice on the market and then quickly took it away with that we are far from December being a foregone conclusion, when financial markets going into this meeting had a 90% chance that December was on the table. But I don't understand how they're cutting now if they're not going to cut in December, since we might be in the same place when it comes to fog. 30 days today marks the shutdown.
Yeah, and it seems like maybe talks have some life down in D.C., but we'll find out. I am curious. We are going to be speaking with the Energy Secretary coming up in about 15 minutes. The component here of China buying energy resources from the United States out of Alaska, do we have any sense of what's behind this, how concrete this is, whether this could potentially replace any kind of purchases from Russia?
This is what the president had to say in his Truth Social. China agreed that they will begin the process of purchasing American energy. In fact, a very large-scale transaction may take place concerning oil and gas from Alaska. Chris Wright, Doug Burgum will get on this. So potentially there are some Alaska energy entities or gas, oil that maybe China will be purchasing. This was something new that we didn't know going into the meeting.
And we'll hash that out in just a little bit. Right now in markets, you're seeing just calm pretty much across the board. A lot of news, just all things going on all cylinders, and stability near record highs. S&P futures, 69.20 up, down just about, less, really not down, basically flat. We're looking at a dollar marginally weaker, again, basically flat versus the euro. 10-year yields flat after rising yesterday by 10 basis points. Not a lot of action here, even with that news fire hose. Coming up this hour, Stuart Kaiser of Citigroup with big tech earnings, pushing equities or trying to push them higher on the margins in certain spaces. Energy Secretary Chris Wright, as we were talking about, with President Trump announcing an energy deal with China. We'll get details there. And Sonal Desai at Franklin Templeton with the Fed chair putting a December rate cut in doubt. We begin this hour, stocks hovering near record highs as investors await more Magnificent Seven earnings. Stuart Kaiser of Citigroup writing this: the early reactions to earnings have been mixed. We remain positive U.S. equity beta with a quality tilt and preference for AI power generation. Stuart joins us now. Stuart, great to see you.
Good morning.
Thank you for being here. I'm glad the polar bears didn't eat you. I'm just curious, going forward, what your takeaway is. Are you still all in on power generation, despite the fact that investors seem a little bit cautious about spending more than revenues are growing?
Yeah, we're still very positive on that story, and I think you're going to get a lot of political headlines next week with Election Day coming up that puts even more focus on utility prices, to be completely honest with you. All the CapEx numbers that Emery mentioned, a lot of that is going straight into data center build-out. I mean, one of the Meta data centers in Louisiana cost $27 billion, which for New Yorkers, that's 3 tunnels under the Hudson River. It's an astounding amount of money. So yeah, we're still there. there are obviously risks to that. Just one headline that these chips need, less power than we thought would be very destructive for that trade, like we saw with DeepSeek back in January. But for now, we do think it's the best Sharpe ratio way to kind of have that AI trade on.
And frankly, the best example of this is Caterpillar, the fact that those shares popped the most since 2009 on energy, not necessarily bulldozers. I'm just curious what you're expecting to learn from Amazon and Apple and whether that could feed into the story or whether these earnings are irrelevant to you based on the CapEx spend that we've already heard from the likes of Microsoft and Alphabet and Meta.
I mean, definitely not irrelevant. I think Amazon in particular, because you're going to get, a little bit of a sight into AWS, but also consumer spending. So I think Amazon will be quite interesting. I think Apple surprised people a little bit, just given the uptake on the iPhone, but definitely important. Last night was a little more important, and that's how it was priced. But, when Amazon earnings, I think after the bell will be very important again.
Do you think the bar is just too high, considering what we saw from Meta?
Yeah, Meta's interesting. I think there's some view that their operating cash flows are starting to converge with their CapEx spend, and the question is how are they going to finance that? And the discussion of how do you finance all this build out is a very big one. I think Oracle was issuing about $40 billion in debt this week. So yeah, it's there is a question here, I think, about how this is going to be financed, medium to long term, and certainly the Meta stuff. It looks like they're all in, and as they should be. I think you both have mentioned the amount of spending. I think it's because these companies view this as existential. They feel like they have to win the AI trade.
You mentioned energy, though. Could the energy story keep up with the spend, or will there be a pause just because we don't have the resources to power this?
That's a good question. I mean, instead of Caterpillar bulldozers, maybe you give your kids Caterpillar turbines. I don't know. But yes, there's an issue with that. I think when Oracle reported, a month and a half ago or so, that was the big commentary, was an amazing revenue forecast. They may not have the chips or the electricity to actually get there. So, our folks on the AI side think you may have to start almost like carving out hyperscalers and have them paying a premium for power, because it does seem like your ability to compete and also your ability to get access to the chips is linked to your, proof of concept on the energy side of it. So yeah, it could be that we're earlier innings, to your point, because of bottlenecks as opposed to anything else.
How reliant is the energy trade, is the AI trade, on the idea of rates going lower? How much was yesterday's shock that maybe this wasn't an all-in Fed with respect to a December rate cut potentially the first sign of a real problem for this trade?
It hasn't been up until now because these companies have amazing balance sheets and are, generating so much cash. I think the fact that, Oracle is issuing a lot of debt and these numbers are becoming so big, it could be a little bit more of an issue going forward. But the fact is, these are some of the strongest balance sheets on the planet from a lot of these large cap tech. So I don't think rates is going to impact them too much because, frankly, they're willing to self-finance this stuff at levels that a lot of people wouldn't finance them at, because they view that spend as so important, right?
So then why is it important at all whether the Fed cuts in December or not? Because you're talking about how it doesn't affect the biggest trade out there, which has been fueling GDP, has been fueling economic growth. It doesn't necessarily affect the fact that we see credit conditions that a lot of people, for all intents and purposes, have been calling extraordinarily loose. And you've already seen the momentum trade, yes, have hiccups, but do really well. So does it really matter if the Fed cuts in December?
That's a very bullish way to look at markets, I would say, if Fed cuts don't matter for equities. Look, I think it would matter more if we had more data, in the sense that if you could confirm that the labor market was continuing to slow down and they actually wanted to get back to neutral, in that case, it would matter more. We're in a bit of a data vacuum. I think the issue the market's going to have a little bit with the FOMC yesterday is really trying to understand the reaction function here for them in December, because Krishna earlier mentioned this. They had a base case. If you look at the data that's come in since that base case, the inflation data was fairly friendly. They themselves have stated downside risks to the labor market from the shutdown. That combination of data wouldn't suggest that you don't cut in December. So I think the question here is what is your reaction function? What are you going to be looking at, and how are you weighing the dual mandate risks at this point?
So does the market now start to care about the shutdown because it may impact whether or not the Fed can move?
Potentially. The market seems very uninterested in shutdown politics at this point. Look, I think coming into this meeting, you were saying, if we go into the Fed blind, there could be some risks there. The market kind of priced that out. The issue with the next one is they update the SEP, which is another level of detail they're going to have to provide. And frankly, your data at that point could be 2 or 3 months old, depending, because it's going to, if they reopen, you can get 2-month-old labor data out pretty quick. they haven't collected anything on either inflation or labor market data now for 2 months. So it's not like they can just push a button and get the inflation print. They could go into that December meeting with a lot less information than we hoped. But yeah, it doesn't. I think you're going to need to see more paychecks miss for the market to really care, to be honest with you.
At this point, though, people are trying to look at what they do have, which is corporate earnings. And we've seen pretty varied earnings, right? There's the Chipotle story. I keep coming back to it. I sound like a broken record. No, I'm not obsessed with Chipotle, but there is this feeling they are eating the margins, insert your pun here, because they cannot pass along any price increases that are commensurate with the costs that are increasing on their end. And they're talking about real weakness, particularly in lower income consumers, at the same time that you're seeing higher end products, in particular first-class airline tickets, for example, do really well. So yes, it's the K-shaped economy. At what point is that weakness going to start bleeding into the credit cracks, the cockroaches, whatever you want to call it, that some people have been trying to suss out? Yeah, it's a great question. I would say first-class plane tickets, you must be doing very well, Lisa. I'm not talking about myself, but carry on. It can be an issue, but look, this has been almost like a slow motion, car crash on the labor side, right? I feel we've been talking about weakness in the labor market for 18 or 24 months. And yeah, there are pockets of risk. Even, Walmart's last earnings, they discussed that, tariffs are going to be an issue in coming quarters. So yeah, there is a build into this, and what we might see is the impact from tariffs, but it's very slow and kind of methodical how it bleeds in. I do think, retailer earnings later in the quarter are going to be very important because, the front half of earnings have been, biased towards larger cap stocks with a lot of exposure to capital markets and a lot of exposure to the AI theme, and those have generally come in well. But look, the market seems pretty happy to whistle by that cemetery, as they say, and until then, markets are going to rally, I think. Yeah, at that point, it'll just remain anecdotes rather than a theme. At some point, it may tip. Stuart Kaiser of Citigroup, always wonderful to have you. Thank you so much for being here with us this morning. Right now, let's get you an update on stories elsewhere. Here is your Bloomberg Brief with Vonnie Quinn. Vonnie.
Lisa, thank you. The U.S. is resuming nuclear testing for the first time in more than 30 years. In a post on Truth Social, President Trump said, because of other countries' testing programs, I have instructed the Department of War to start testing our nuclear weapons on an equal basis. That process will begin immediately. Shares of Chipotle are plunging in the pre-market. The fast casual restaurant chain cut its full-year outlook for the third time this year on weak traffic. The company is also dealing with the rising costs associated with beef prices and the impact of new tariffs. The investigation into the Louvre jewelry heist continues. 5 more suspects have been arrested. According to the prosecutor's office, the 2 men who were arrested last week may have been charged with theft by an organized gang and remain in jail. The stolen necklaces, tiaras, and earrings have not been found. That is your Bloomberg Brief. Lisa.
Vonnie, I cannot wait till they make the movie, and I want to see if these are real amateurs. I mean, dropping a crown, I still can't get over that.
It's insane. It's insane. I want to know if they're intact or they've already been sent to diamond cutters and already tiny versions are just spread across the world. Then you're never going to be able to track them down.
That's the worst case scenario that some people are worried about. Up next, not that, striking a deal.
I thought it was an amazing meeting. He's a great leader of a very powerful, very strong country, China. We've come to conclusion on many very important points.
U.S. Energy Secretary Chris Wright joining us next. This is Bloomberg Surveillance. consequence for U.S. markets.
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something? Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
A bit of calm after a whole host of drama right now in markets. Not seeing much action, pretty much flat across the board for the S&P. Futures near those record highs. In the bond space, that earlier gain you're seeing reverse with yields again marginally higher, building on the losses after yesterday's 10 basis point rise in crude. Down about 0.8%, a real detente between the U.S. and China coming to an amazing end, in the president's words, as we did get some sort of deal under surveillance this morning, striking a deal.
I thought it was an amazing meeting. He's a great leader of a very powerful, very strong country, China. And what can I say? We have, it was an outstanding group of decisions, I think, that was made, and we've come to conclusion on many very important points.
Here's the latest. President Trump teasing an energy deal with China after both countries reach a tariff and rare earth agreement. Joining us now, I am so pleased to say, is U.S. Energy Secretary Chris Wright from Toronto, where he is in the G7 meetings with other world leaders, talking about energy and what can be done to build out. U.S. Energy Secretary, thank you so much for being with us. I want to start with this deal that President Trump was hinting at with China, talking about Alaska oil. What details can you provide us with? What contours of this transaction do you expect to come to light?
Look, China is by far the world's largest importer of oil and importer of natural gas. The U.S. is by far the world's largest exporter of natural gas and by far the world's largest producer of oil. So there's so much space for mutually beneficial deals between the U.S. and China. Alaska was mentioned in that deal dialogues, enormous reserves on the Alaskan slope. They've been strangled by the Biden administration, and Alaskan production's been in decline, but lots of room for that production to grow, lots of room to bring natural gas from the North Slope of Alaska and bring that to all of our allies along the East Asian Rim, or frankly, anywhere in the world. But President Trump is just a master negotiator. He finds out what is it that's critical to the Chinese, what is it that's critical to the United States, and finds that sweet spot of a deal that works for both countries.
Could potentially the United States fill a gap if China decides to buy less energy from Russia, especially since the U.S. government sanctioned Rosneft and Lukoil?
Absolutely. Absolutely. Today, the U.S. produces 50% more oil than Russia or Saudi Arabia. And it just puts not just the United States, but the world in a better position. Can we squish out half of Russian oil exports and still have a roughly balanced oil market? Absolutely, we can.
Have you been in touch as well with your counterparts in South Korea? The president coming back on this trip talked about the tariff rate in South Korea and the plan for them to buy oil and gas in vast quantities, part of that trade deal.
Yes. I've been in dialogues with the Korean staff since I arrived in the office. Korea is a great industrial nation, also short on energy resources, but long on other assets. So, yeah, lots of room for the United States to grow our role in supplying natural gas, oil, and, frankly, nuclear technology to South Korea.
I bring this up because it sounds like, are you preparing some sort of trip to the Asia Pacific if you have to meet with your Chinese counterparts and your South Korean counterparts for the United States to send more energy to that part of the world?
Oh, I go wherever the president tells me. But yes, I would be going to Asia in a few weeks, and heck, I may be going sooner than that. I'll get debriefed from all the dialogues and all what must be done promptly in the follow-up. Could be heading there very shortly. But I don't know about that right now. But of course, Asia is the center of the world economy after the United States. So yeah, that's a critical alliances, critical partnerships, and critical oil demand sources.
Mr. Secretary, I feel like we should have a map here of all the places where you've got trips planned, because I suspect that you're going to be heading to Greece soon too, and the whole idea of how much the U.S. is exporting in terms of energy to the European region, especially as they reduce reliance on Russia. Can you tell us anything about how that relationship is developing?
Actually, it's been great dialogues. I think the European nations, the war in Ukraine really crystallized, yes, it wasn't a good idea to have all of our key energy supply coming from Russia. Largest supplier of oil to them, largest supplier of natural gas to them, largest supplier of coal to Europe. And the United States has slid in to displace Russia as the largest supplier of natural gas to Europe. We can do the same thing with oil. And I think we're today the second largest supplier of coal to Europe. So I think there's mutual agreement on both sides there. Certainly there's some regulations in Europe, CSDDD, which is just a way overreach in the regulatory regime that's going to make it sticky to ramp up energy movement as fast as we'd like. But we're in constant dialogue to fix those problems. I'm excited about the future relationship between the European nations and the United States. It's always been good, but I think it's going to grow a lot.
Mr. Secretary, a lot of people who come on this show talk about their concerns about higher energy prices in the United States. They talk about artificial intelligence, the power demands, the inability to really provide the energy that would be required to expand at the pace that a lot of AI giants are talking about. How do you plan to mitigate that? Is there a level at which power prices get so expensive that the United States will reduce some of the exports to the rest of the world?
Well, there are actually different factors that control them. Like our large exports of natural gas today are actually still relatively modest compared to the amount of gas we produce, and we can easily produce vastly more natural gas today. So power prices, the problem isn't the price of natural gas. The problem is the infrastructure, generation facilities, transmission lines. The Biden administration for 4 years forced the closure of a lot of coal plants, a few gas plants, prevented the building of new coal and natural gas power plants. They built a lot of unreliable intermittent electricity that's spread all over the country that takes more transmission assets. All of that goes into the rate base and has pushed up prices. Frankly, it's part of the reason why President Trump got elected. So we're having to reverse all those things. Stop the closure of coal plants. Make it easier to build new natural gas plants. Make new sources that want to come on be successful commercially, not dependent upon subsidies, and not require massive new transmission investments that all just go on to the ratepayers. So we're doing a lot of things at FERC. We had a big announcement last Thursday I probably can't go into here, but specifically aimed at artificial intelligence, how we can speed new firm generation without driving up the price of electricity. I share the American consumers' worries about the recent rises in price of electricity over the last 4 years, and I'm working 7 days a week to stop those price rises and enable the United States to lead in artificial intelligence.
We've seen one of the most significant announcements from this administration when it comes to nuclear. The government is planning this partnership, $80 billion for nuclear reactors, with a Canadian company, Westinghouse. Who will develop them and where? Can you give us more details about this?
Oh, I would call Westinghouse an American company. It's a legacy American company, and it's majority owned by the Americans. It has a Canadian partner in Cameco, but it's an American company. This is a plan to partner across the country at a few different locations to build, as you saw in the announcement, they gave dollar amounts, but a large amount of power. Think of order 10 gigawatts of new electric generating production capacity, and to do it in a way that's efficient. So instead of one here and one starting a few years later, we want to stage in the construction of these plants to most efficiently use construction workers, assemblers, fabrication, so that we lower the cost of nuclear generation, re-stand up the supply chain in the United States. This is quite an exciting project, and more details will come out as we fill in those dots. But President Trump promised to relaunch nuclear energy, unleash a nuclear renaissance in the United States. This is a big part of that effort.
And just, I wanted to get your take on a reversal we've seen from Bill Gates, someone who's long talked about climate change. He's sort of pivoting his stance, and according to his staff, you recently met with him. Did you have a hand in how now he's talking about energy?
I've had multiple great dialogues with Bill Gates over the last year, at multiple times and at some length. Of course, he's a very thoughtful, successful entrepreneur, and climate change is a real thing. It's a real challenge. It's just not remotely close to the world's top challenge. And the problem is, by putting it the top challenge, the ineffective things governments have done have raised the price of energy, lowered the reliability of the energy system, and they've stood in the way of efforts to combat hunger, food insecurity, energy security, education, and all the other global challenges. So yeah, Bill and I have had great dialogues. He's done fabulous stuff in public health around the world, and I'm thrilled to see him talk in a more candid way about this issue.
U.S. Energy Secretary Chris Wright, thank you so much for your time. Have fun up there in Toronto. Coming up, Edward Fishman of Columbia University as U.S.-China trade tensions ease. For now, plus Yahira Anand with your morning movers. Eli Lilly shares higher after raising its full-year revenue outlook. You're watching Bloomberg Surveillance.
In case you missed it on Bloomberg Tech.
This is why we need to reindustrialize. This is why we need to have our own rare earth supplies. This is why we need to be able to make our own chips and our own computers and our own products downstream, because it takes away leverage from China. They do have a lot of leverage right now, and so it's very hard to make deals with them. I think it's actually healthy for the U.S.-China relationship for it to not be so dependent on China.
Don't miss Bloomberg Tech, live every weekday.
Didn't really think I had a problem.
I would isolate, self-medicate.
Like 48.5 million Americans, they didn't choose addiction. Go to shatterproof.org/findtreatment. Watch the film No More Secrets and find out how you can get help. That's shatterproof.org/findtreatment.
Bringing you up-to-the-minute energy news whenever and wherever it happens. I'm Joanna Bersecci in Vienna, and this is Bloomberg.
In case you missed it on Bloomberg Brief.
This is a big difference from April. Remember when there was no place to hide? And now, even though the 10-year is below 4%, if you start to see the labor market showing signs of firing, whether government or the private sector, I think then the 10-year has a lot of room to decline, because then the Fed's cutting into accommodative territory, not just getting to neutral.
Don't miss Bloomberg Brief, live every weekday.
Seeing a bit of stability this morning after a ton of news with tech earnings still on deck. Amazon and Apple after the bell. We did get Alphabet, we did get Microsoft, we did get Meta, and the results were very much mixed. Still, you are seeing gains across the board after reversing some of the earlier losses. Futures up almost 0.1% on the S&P. On the Russell 2000, up almost 0.25%, despite the fact that you really are seeing some concern about the Fed not cutting in December. If you take a look at the bond space, it's not necessarily cohering with the strength that we're seeing in the Russell 2000. Yields higher, not lower, building on the losses that we saw from yesterday. 10-year yields up 10 basis points yesterday, and now you're seeing it up almost a basis point again. 2-year yields up just marginally, 3.6%. Really raising a question about what the Fed's reaction function is. The dollar had been stronger yesterday on the back of that disappointment about a December rate cut. Now it's a slightly weaker, although basically flat, versus the euro. 2 hours away from the cash open, here are your morning movers with Yahira Anand. Yahira.
Hi, Lisa. It was a beat and a raise for Eli Lilly, so shares are up 4.7% in the pre-market. The company raised its full-year guidance as demand bounced back for its blockbuster weight loss and diabetes drugs. This is Lilly's second upgrade in just a few months, cementing its place as the leader in the weight loss market. And moving on to its competitor, Novo Nordisk, it is upping the ante in the obesity drug race, offering $6.5 billion to buy Metsera and outbid Pfizer. That is why you're seeing shares of Metsera rise nearly 20%. Plus, if certain targets are met, they'd up the offer, topping Pfizer's by more than 10%. It's an aggressive move by Novo Nordisk, taking aim at rivals as it fights to regain the lead. But as we saw with Eli Lilly, it is a tall order for Novo. And we end on eBay. Those shares are down 8.6% after the company gave a profit outlook that missed expectations for the all-important holiday period. The other issue is that shares had run up 60% this year, so investors had high hopes. Lisa?
Thank you so much, Yahira. That seems to be the story pretty much across the board. Yeah, is it bad or just not absolutely stellar and better than good? On our radar this morning, despite speculation, President Trump clarifying he did not discuss allowing China access to NVIDIA's Blackwell chips during his meeting with leader Xi Jinping. The two did talk about some of the chip makers' other products, but not the highest tech one that has caused the most concern. Meta and Microsoft, meanwhile, as well as Alphabet, announcing plans to increase CapEx on AI over the next year at a tremendous pace, testing the patience of many investors. The three companies spending a combined $78 billion on the AI build-out in the latest quarter. We've got more Mag 7 earnings continuing today. Apple set to report revenue after the close as the company briefly topped $4 trillion in market value Wednesday. Amazon also reporting after the bell, hoping to show investors that its AI investments are paying off. So which is it, the Apple upgrade cycle or this question of the cloud competition and who's winning?
I don't know. I think it's going to be interesting. For Apple, I think it's all priced in because all the channel checks are showing that individuals are going out and buying this new phone. I don't know if it's because Apple's offering something brand new or just people have been waiting so long to upgrade their phone that they're finally like, okay, we'll go out and buy the 17. I think Amazon is going to be more interesting, especially given what's going on with the other cloud computing rivals and an update with them, what's going on with Anthropic. That's really going to be the one to watch. And they recently laid off individuals. So what is the commentary going to be around that?
I'm so glad you mentioned that. Very curious about Amazon. Coming out yesterday, we reporting, or 2 days ago rather, reporting that they were cutting off thousands of employees, talking about how in the future artificial intelligence would allow them to do that to an even greater degree. How much skepticism do you think there is based on how quickly they have doubled and tripled their staff in response to a tremendous expansion? So this could just be sort of trimming around the edges.
That's what they're saying officially, but you do have to wonder, are they finding ways, thinking about ways? And the CEO talked to us over the summer, how they're going to find ways to trim margins, be more efficient with artificial intelligence. It's not just about productivity. Can you actually use AI to fill a job.
Meanwhile, all I can think about with the Apple upgrade cycle is that when you hear a phone drop, you know the sound of an Apple iPhone dropping, and everyone just wonders, oof, is that going to be the one? I'm telling you, that's like a classic feeling. Maybe it's just me and my kids. Turning to trade now. The U.S. and China are reaching a trade deal. President Trump and Xi Jinping agreeing to extend a tariff truce and roll back export controls. Edward Fishman of Columbia University and author of Choke Points joins us now. Eddie, great to see you. Thank you so much for being here.
Great to see you, too.
So what was your initial take on this deal or this agreement or this discussion between Xi Jinping and Donald Trump?
Sure. So look, in a sense, we're sort of back to where we started. Trump came out right after he was inaugurated in January with these massive tariffs on China. First the fentanyl tariffs, then eventually the reciprocal tariffs. And basically ever since then, it's just been an effort by the Trump administration to walk those back without appearing to lose to Xi Jinping. To me, the big sort of strategic impact right now is that China has shown the world that its control over rare earth minerals has the United States over a barrel. And what that means is it just dramatically decreases the U.S. influence over China, whether that's on artificial intelligence or even on Russia, where, is Trump actually going to pressure Xi Jinping over Russia? I'm skeptical.
Well, but do you think that this actually pushes the United States to have closer ties with other countries that are dealing with the same issue? It wasn't just the United States, it was also Europe that really was alarmed by these rare earth exports because they were hit just as much as the United States. How much does this sort of expedite this push for the rest of the world to create some barrier between themselves and their reliance on Chinese products?
So that is actually how, if Trump is going to turn this into a win, it's going to be building what some people have called allied scale, coming together with the Europeans, with allies in the Asia Pacific to actually build alternatives to Chinese supply chains. Rare earths obviously would be a great place to start. What I'd say is if you look at Trump's first term, probably the biggest success of his first term was Operation Warp Speed, where rapidly they developed these vaccines that really helped us get out of the COVID pandemic. We need something like that today with rare earths. The thing is, though, we're never going to be able to do that totally domestically, just at home. We're going to need to work with allies for us to fix this problem in any reasonable amount of time.
But is there any appetite for Europe to do that, especially given the fact that they have a ton of climate initiatives, and this is a very dirty industry?
Yeah, look, I agree with you. At the same time, I think that despite those concerns with climate, and I was just in Europe a couple weeks ago, there's a significant concern right now that China basically, again, has veto power over any policy we want, right? Even Taiwan, right? Thank God that didn't come up, apparently, in the conversation yesterday. But there's real fear that American deterrence vis-a-vis China over Taiwan has dramatically decreased because China has shown that it can shut down Ford factories in a matter of weeks if it cuts off our access to rare earths. The thing I'd say, by the way, the U.S. has similar power over the dollar. We just haven't been using that against China. We've been using tariffs, which are a significantly weaker weapon.
Well, what would your suggestion be to the administration to use the dollar?
Financial sanctions, right? So
secondary sanctions on banks if they buy Russian oil, things like that?
Sure. So certainly when it comes to Russia, the key is applying pressure to China, India, et cetera, to tell them that if they keep buying oil from Russia, their banks, their refineries are going to be cut off from the dollar. But even vis-a-vis China, I think Trump's biggest mistake was coming in and assuming that because the U.S. runs a trade deficit with China, the fact that we import more from China than China imports from us, that we would always win a trade war because we could always impose more tariffs on China than they can impose on us. What he didn't anticipate was asymmetric retaliation, that China wouldn't necessarily retaliate just with its own tariffs, but it would do export controls and rare earths. Well, you know what? The biggest choke point in the global economy isn't rare earths, it's the dollar, which is still used in 90% of foreign exchange transactions. And even for China, 70% of its own trade is settled in dollars.
But Ed, that would be the nuclear step, because that can also have mass implications on the United States and our stock market.
Look, I'm not saying that you would cut off every single Chinese bank from the dollar, but I think if the goal is to establish some level of deterrence with China, to show that we can escalate as well, the area to go is financial sanctions. I mean, if you look at big Chinese companies like Huawei, it's actually remarkable that they aren't under sanctions, right? I mean, we've done a lot to try to cripple Huawei's access to a lot of things, but we haven't put them under sanctions.
But Eddie, we have seen sanctions placed recently on Lufthansa and Rosneft going in Russia and going directly after some of the biggest oil giants in the region. Do you expect that to be successful? Is that sort of a template of what could be used to come?
Yeah, this is something that I hope, because if you look at Trump's strategy even on India, right? If you go back to August, he wanted India to cut its purchases of Russian oil, so he came out with these massive 50% tariffs on India in August and said, please cut your purchases of Russian oil. Well, the data speaks for itself. In September and October, India increased its purchases of Russian oil. And it's because, again, tariffs are not a significant geoeconomic weapon. India's exports to the U.S. fell in those 2 months, but its overall exports actually rose because it can just sell stuff to other countries, right? But what's happened in the wake of the sanctions last week is we've already seen refineries like Reliance in India and big Chinese oil companies recalibrate their purchases of Russian oil. So I do think you'll see some dip in Russian oil sales in the coming months. Whether it's a durable effect, though, is going to depend on Trump actually pressuring Xi Jinping and Modi and telling them that, look, if you keep doing this, there actually will be consequences for your companies.
You know, it's really interesting to think about it through your lens, through the choke points. We saw the choke point that's rare earth minerals. We've seen the choke point that is energy, especially now at the AI build-out, and the choke point that is the dollar. And I want to stay on the dollar, this question of how much what happened in 2022 with some of the sanctions on Russia and this question of seizing assets that were dollar-denominated caused a flight from the dollar to eliminate that choke point for other countries. How realistic do you see that flight away from the dollar? Because everyone wants to get away from these choke points and get a little bit more leverage in a world that seems to be controlled increasingly by the people who control these choke points.
I think that's really well said. Basically, if I'm trying to, at a macro level, what's happening in the global economy today, economic warfare is everywhere. When the U.S. weaponizes the dollar, it makes other countries feel vulnerable. They try to insulate themselves. When China weaponizes rare earths, it makes us feel vulnerable. We invest in MP materials and buy, 15% equity in them. So yes, there has been efforts by China and Russia, et cetera, to diversify away from the dollar. So far, the data doesn't really show that those are succeeding particularly well. To me, the biggest risk isn't so much China and Russia. They're always going to be nervous about the dollar. Is Europe concerned about the dollar? Is Japan concerned about the dollar? I think earlier this year, when Trump started imposing economic warfare not just on China and Russia, but against Europe, against Japan, you did start seeing even our friends start saying, wait, we need to sort of diversify. If that is a threat that is ongoing, if our allies in Europe are just as worried about U.S. sanctions as they are about Chinese export controls, then yes, there will be a flight away from the dollar.
Well, you're just in Europe. Whose side are they on?
The Europeans are clearly on America's side. I mean, the Europeans want the United States to be there for them, their ally vis-a-vis Ukraine, and they want there to be the U.S. to be their ally vis-a-vis China. The Europeans are terrified of Chinese overcapacity too. Look at the European auto industry.
They're not doing anything about it.
On China or Russia? Which one?
On China.
Look, I would agree with you that they haven't.
On Russia.
Yeah, well, Russia. So Russia, because this, I'm glad you brought this up because on Russia, there's been this narrative from the Trump administration that the Europeans haven't been doing anything on Russia sanctions. Come on, they imposed secondary sanctions on Indian refineries and Chinese banks in July and again last week. So the stuff that in the U.S. we're saying, wait, what is Trump going to sanction China or India? Europe is doing that. I mean, and actually, they have now drawn China's ire because they've been sanctioning Chinese banks.
Eddie Fishman of Columbia University, thank you so much for being with us today. Really appreciate your thoughts, always deeply thoughtful. Right now, let's get you an update on stories elsewhere this morning. Here is your Bloomberg Brief with Yahira Anand. Yahira.
Hi, Lisa. OpenAI is reportedly aiming to go public by 2027 with an IPO filing planned by the second half of next year. Reuters reporting the offer could raise at least $60 billion and value the company at up to $1 trillion. OpenAI has just completed a restructuring into a for-profit business, signing a new pact with Microsoft and making concessions to regulators. Meanwhile, dozens have died across Cuba, Haiti, and Jamaica after Hurricane Melissa left widespread destruction across the Caribbean. The storm is on track to reach Bermuda this morning as a Category 2 or Category 1 hurricane. Hundreds of thousands remain in shelters and without power, and the U.S. will deploy disaster response teams to the hardest hit areas. And the Toronto Blue Jays are one win away from their first World Series title in 32 years after beating the LA Dodgers in Game 5. Blue Jays starter Trey Savage gave up just 3 hits and 1 run over 7 innings as Vladimir Guerrero hit his 8th home run of the postseason in the 6-1 victory. Toronto will look to clinch the title at home on Friday night. That's your Bloomberg Brief. Lisa.
Thank you so much, Yahira. Up next, casting doubt on a December rate cut.
At this meeting, there were strongly differing views about how to proceed in December. A further reduction in the policy rate at the December meeting is not a foregone conclusion.
Sanel Desai, Franklin Templeton. last night. You're seeing S&P futures marginally
is not a done deal, quite frankly.
minute, Meta just put out this